Hi, Rachna, good morning.
Good morning. Can you hear me?
Yeah, I can hear you well.
Okay, fine.
So we are gathering. We'll give some time for we are gathering. We'll give, yeah.
I'll just try my sharing the screen as well, or you'll be sharing the
Yeah.
presentation.
I'll just give you the co-host, right?
Yeah, sure. Yeah.
Yeah. Now you have the co-host, right? So you can do that.
Okay, I'll try.
Hi, Manish. Good morning. Hi, Vikas.
Yeah, good morning, Vikas.
Yeah, good morning. Good morning.
Good morning, Rachna.
Good morning. Morning. Can you see my screen?
Yes.
No, we cannot. Like, you need to share your screen.
Can you see
Yeah.
my screen?
Now we can.
Now, yes.
Okay, sure. Thanks. Done.
So we'll wait for another 5 minutes, and after that we'll start.
Yes.
Hi, Hemant. Good morning.
Good morning, Hemant bhai.
Yeah, good morning. Good morning, sir. Yeah.
Just to inform everyone, we are on live now. We'll start in 2 minutes.
Hello, guys.
Yeah. Good morning, Mr. Nitin.
Good morning, Nitin ji.
Good morning, everyone. Good morning, Ms. Bhusari.
Thanks.
Very nice
Good morning.
to make your acquaintance here.
Manoj has not joined.
Yeah, he will join in a minute.
Babu bhai. Babu bhai.
Good morning, everyone. Hemant, you want to start?
Yeah. So, very good morning to all of you. A very warm welcome to all participants. Myself, Hemant Mehta, ThinkTank Multidisciplinary Global Platform Chapter Leader, welcomes you all to the ThinkTank Global Conclave for India Growth Story and Meet the Expert Series, which is covering in detail management think tank, valuation think tank, IBC think tank, financial reporting think tank, market, stock market updates, and almost all the gamuts of financial world in the think tank chapter. As a major part of think tank at Vivek Patra, Vivek in Sanskrit means knowledge and wisdom. Patra is an innovative newsletter updating containing the slides on sharing latest development and real-life examples by CEO, CXO, CFO, specialist, and professional with global experience. Today we have Think Tank Multidisciplinary Global Platform special meeting for all stakeholders in finance, corporate affairs, industry, and profession. Think Tank has been in existence since over a decade. The idea conceived somewhere in January 1991 to have conferences conclave with CEO, CXO, CFO, panelist, and specialist, sharing experiences and real-life examples. Our panelists are finance leaders working in reputed companies or profession since many years and have deep domain knowledge. Think Tank platform now, digital, has got overwhelming response globally on digital mediums and expanding rapidly through LinkedIn, Facebook, etc. Our participants and experts have rich experience in industry and professions who have done CPA, CFA, CA, CS, CMA, DISA, FRM, IFRS, BTech, Masters, PhD, and all type of professional degrees, sharing experiences and knowledge, wisdoms, spreading as a reach out initiative globally. You can visit our website www.thinktank.co.in. Due to overwhelming responses to our annual report, corporate strategy, and ESG, we have announced 6P awards and recognition. 6P stand for profit, people, planet, professionals, promoters, tech, and platforms. For corporate annual reports, analyst, professional, achievers, CEO, CXO, CFO, a very respected jury with rich experience in interaction with the stakeholders and boards. The recognition and award would be announced with a rigorous process of scrutiny and choice and interaction with the participants, and would be given digitally and if possible in a well-located auditorium in Mumbai, like the Sabha Group or similar type of venue, subject to pandemic rules. As a participant, you are aware that recently we have launched a much-awaited referencer, you can say a type of newsletter, appropriately titled Think Tank @Vivek Patra, India Growth Story, a comprehensive conference material compilation over 600 pages, sharing experiences by CEO, CXO, CFO, specialist with latest development, and series on blocking regulatory for financial reporting, Ind-AS, IBC, taxation, digital, capital market, technical analysis, ISA, bank audits, corporate affairs. It would be available for subscription, and any ethical contribution by well-wishers is welcome. We'll also be covering important and latest development as suggested by many participants in coming weeks. Example, valuation, financial modeling, health is wealth, cybersecurity, blockchain, MSME, etc. We request all to subscribe to Think Tank YouTube channel for watching summits, conclave, webinars, and join and connect the network on Think Tank webinars group on LinkedIn and Facebook pages. Telegram channels specifically created on suggestion of many participants and panelists. We once again welcome all members and panel stakeholders joining this event. And I especially thank my colleague in the digital global team, Anupam, Aditya, Ajay, Anurag, Rachna, Aishwari, Hitesh, Mihir, Malvika, Nipun, Nishchal, Pramod, Praveen, Rakesh, Rucha, Pramod, Harkanan, Sandeep, Umesh, Vijay, Vikas, Lukesh, and others for regularly contributing to ThinkTank at the rate Vikpatra. Today, we have an excellent ThinkTank multidisciplinary platform seminar. Eminent speakers, stalwarts, and specialists sharing experience and latest development. Let us have an interactive event. And, we have today also assorted financial gametes like, taxation, then market updates, and etc. So with this, I welcome you all. And I request Manoj ji to proceed ahead. Manoj ji, over to you.
Thank you very much, Hemant bhai. It's indeed a pleasure and privilege for me with all of you in this wonderful think tank conclave. So many speakers from corporate sector, professional specialists have joined for interactive session. And hello.
Yeah, we can hear you. We can hear you.
Yeah, it's good to see. We have stalwarts Vikas Agarwal, CEO of a leading SME funding. Rucha, we have experts from National Stock Exchange platform for SMEs listings, and a host of other speakers contributing on so many topics. So we can, as usual, we do deep dive presentations into various aspects from a 360-degree angle, and let's make the session very, very interactive. So can we have
You're not audible, Manoj.
Yeah, Manoj ji, I think he's got some
for listings of SMEs, migration to main boards, also listing on main boards, and also startups. We'll do a series of sessions, and today we'll cover a deep dive into SMEs, the various issues which are there, and how SME platform of NSE is contributing to the India growth story. So, are you there?
Yes, I'm there, Mr. Manoj.
Yeah, can we have your presentation?
Actually, I thought of sharing a presentation, but I somehow have an issue with my laptop. So I will just talk about it. Is that fine? Or if somebody from the back end could share my presentation?
Well, I think Jayesh is also there. He can share from his laptop.
Yeah, sure.
Okay.
I will do that. Yeah.
Yeah.
Sure,
so,
Jayesh. Thanks, Jayesh.
Yeah.
And I would like to add Jayesh is a part of the NSE team. And Jayesh, I think you mentioned you have over 12, 13 years experience in NSE, and you are also a professional company secretary.
Yes.
In fact, we were discussing you would be doing a series of presentation, and later Jayesh should also become a speaker. Once he gets well known, he will get invited to so many platforms, and incidentally it is happening. I know Jayesh has also worked very hard. Getting
Jayesh, correct. Thanks, Mr. Manoj. Thanks for having me here, and thanks for having NSE on this think tank conclave. We are really happy to be here today on a Saturday morning and brief about the SME platform emerge that NSE has. And as you rightly said, Jayesh is the guy who has witnessed 1 to 244 listings at NSE. So 0 to 244 is a journey of Jayesh on the SME platform of NSE. So actually he he carries more experience than I do. I carry more experience in NSE. He carries more experience in the SME segment. So it's a great combination to be together and work towards this segment, which needs a lot of hand-holding, lot of facilitation, and NSE is committed to help SMEs raise their funds seamlessly using the public markets. So thank you once again for having me on this platform, and good morning to all the participants. I will be walking through what are the various things that SME, while Jayesh loads the presentation. I would
sorry to interfere. Manoj, can you ask somebody to make me the co-host? I'm not able to share my screen. Hello.
Yeah, it's Aditya has to do that.
Yeah, I will just share the screen now. Thank you.
Oh yeah.
Before we start the presentation, I would suggest Rachna and Jayesh just introduce yourself briefly, your qualification and your experience relevant to the topic.
Sure. So,
and anybody can connect with you on LinkedIn or Facebook,
sure,
or whatever IDs you have. I'm sure you will be on that.
Yeah. So Manoj, Rachna, to the participants here, I'm Rachna Bhusari. I'm the Vice President at National Stock Exchange of India Limited. I head the primary market division at NSE. So all the listing business development initiatives at NSE are headed by my team, which comprises of Jayesh and others who take care of debt and the main board IPOs as well. And I've been with NSE for last 21 years. I'm a commerce graduate with law and management also to my qualifications, and worked on various aspects of National Stock Exchange. So, and Jayesh, would you want to brief about yourself?
Yeah, so I'm Jayesh, and I'm Associate Vice President at NSE. And I'm looking after Emerge platform since the inception, that is 2011, but having experience in NSE from past 15 years. So I'm working with Rachna on various aspects which are required from the listing point of view. Yeah, Rachna.
Yeah. So, this Emerge platform, NSE platform of SME segment is called Emerge. The name itself symbolizes that it is meant for growing companies, and it will help or act as a launch pad for growing companies and emerge them to be larger corporates, which is most aspirations of the promoters or entrepreneurs when they start their business. So this platform was launched in the year 2012, and it was regulated by SEBI. And the most beautiful feature of this platform being that while this platform was designed, it gave a carve out for small and medium companies to list with less onerous requirements. However, it kept very friendly infra ecosystem, or it facilitated a very friendly infrastructure wherein the members of the exchange and the current investors without any additional formalities could go and trade or facilitate trading into the SME Emerge platform. So that was one very beautifully thought of process by the regulator, wherein it allowed the current ecosystem to be facilitating SME platform to take a flip immediately as soon as it's launched. So in 2012, today we are 10 years in the SME platform, and we are more than 240 companies listed on the NSE SME platform, 3,700 crores of funds raised, more than 35,000 crores of I would say market capitalization that has been achieved, and the one more important milestone that Emerge is depicted is it has helped these smaller companies actually migrate to the main board and be traded amongst the cream de la cream of the Indian corporates, which is 101 companies of Emerge platform have actually paved their way, shown their growth, and moved to the main board of NSE. So it's a great milestone in the life cycle of a company, and as well as an achievement for this platform, which is meant for small and medium enterprises. So going forward, what happens is mostly people, when they are into business activities, funding is their common requirement. They always feel that, yes, we need funds. And fund is a never-ending requirement. They've exhausted their own funds. They've already utilized the support that have been offered to them by their friends and banks and relatives. But the need for fund is everlasting, and surpassing the need what it was earlier. So in such scenarios, what happens is, does the company actually think about that, growing is enough now, I cannot imagine growing because I don't have funds? Or yes, there are alternate funds available, the alternate paths available wherein the company could actually tap funds. So considering all these challenges, a platform was designed for growth phase companies, which you can see in this slide. We've pegged Emerge as a growth phase company, alternate fundraising mechanism. So at this stage, when the company is at this stage, they can go and raise funds from the public markets using the IPO mechanism and be a listed entity. So now what it takes to be a listed entity on the Emerge platform. Right from 2012, the criteria that SEBI put up in place was very simple. They stated that any company with a paid up capital of less than 10 crores can come and list directly on the SME segment. And anybody between 10 to 25 can list either on the main board or on the SME platform, provided they meet the criteria of the main board. So in a nutshell, if I have to simply say, any company with a paid up capital of less than 25 crores is good to go and list on the Emerge platform. What NSE added is some more criteria to facilitate that, we have more credibility on this platform. We said that we will have a 3-year track record and followed by a 2-year operational profit in any of the 3 years that you show your track record on, and the company should have a positive net worth. Now the question comes about 3-year track record. When we put in this criteria, most of the entrepreneurs, they came back to us and said that, look, we are having a track record in this business for multiple years, but we are a newly incorporated private limited company or a public limited company. So, are we deprived of tapping funds using this mechanism? And the message was loud and clear that no, track record means not the track record of the company. It means the track record of the promoter in case you're not able to establish the track record of the company. So if the promoter has been doing the same business in whatever capacity it was, whether it was sole proprietor or partnership, just demonstrate your track record in that line of business and you're good to go and you're an eligible company to list on the Emerge platform. So that is where the criteria of track record is extended to the track record of even promoters in case the company doesn't have an existence for 3 years. So that was very well thought of and felt that yes, SME companies could utilize this mechanism and list themselves onto the stock exchange. So once you think that, yes, I am an eligible company and I'm good to go, what is that you should know about SME segment? What is that? Most of the people, they know what is on the main board. And that is where somewhere it adds to an advantage that, yes, what's about being a listed entity, but it also brings a lot of disadvantage to the table to an entrepreneur to say that, oh my God, these are the requirements. It's onerous, it's expensive, it's time consuming. I will not be able to do this on the SME. I'm a small company and I don't think I fit this kind of framework that is put in place. So what SEBI said is that there will be a regulatory framework which will be a little distinct from the main board for the SME segment. And the differentiations I will highlight is that the important feature being is that you don't have to go to SEBI for observations on the SME IPO approval. A large benefit that has been given by SEBI is that the onus is on both the exchanges, whether it is NSE or BSE, to give their approvals for launching the IPO of an SME segment. Now, this not only gives comfort to the entrepreneur that yes, they have to go through one line of scrutiny by the exchange, but it also adds a lot of benefit by reducing the time frame of getting approvals and launching an IPO. So what happens is that SME companies, or whether it's any corporate, they need funds in a timely manner. And this dispensation that has been given by the regulator with respect to approvals by the exchanges works wonderfully well for the SME companies to launch their IPOs ASAP. So that factor has been actually worked very well, and we see the success of this platform where so many companies have opted to list on the Emerge platform. Another distinct feature to this regulatory framework is that you can complete your IPO with 50 allottees, 50 applications during an IPO. You don't need 1,000 like as specified in the main board. So minimum number of allottees that you need to have in an IPO of SME is 50. Other important feature is 100% underwriting, 3 years of market making. So this all aids to giving comfort to the issuer that their IPO would be completely subscribed in case there is an undersubscription by the investors, then the merchant banker has an obligation to subscribe, and that's why there's a 100% market making available. 100% underwriting available. And market making adds to the fact that a promoter or the entrepreneur is given comfort that during the company in its listing cycle will not have to worry about providing liquidity to the shareholders, because there will be a market maker appointed by him who would subscribe to the inventory and would offer a two-way quote on a daily basis for a period of 3 years that provides mandatory liquidity in the secondary market. So again, these features all encompassing have worked wonderfully well for SME platform. Some of the commonalities that were kept for SME as well as main board is that you have to have the DRHP on the same format as it's on the main board. The primary reason for it is it's a disclosure-based regime. You have to give all the information that's available to the investors in the DRHP so as to give them comfort and help them take a very, very informed decision. So that was completely similar to that of main board. The second similarity is about dilution. You need to dilute 25% minimum even on the SME segment. There are no leeways out there. The third thing is about that, your compliance requirements, what is there on the main board would apply even on the SME segment, barring some corporate governance requirements. But the frequency has been reduced from quarterly to half yearly for SME segment. This gives a lot of breather to the SME segment to, comply with and have a sufficient time frame for them to prepare themselves actually to be a compliant, regulated, compliant entity. So this again works wonderfully well for an SME segment. Post-listing compliance I've already mentioned is you have to give 6 monthly compliances rather than quarterly. Migration, important feature that this platform provides us. This gives an option to the companies to migrate to the main board, provided they meet some criteria, which is again very simple, about having a paid up of 10 crores and above and a market cap of 25 crores and above, and having a hygiene, good, decent corporate behavior while they were being listed onto the exchange on the SME platform. So if you fulfill these criteria, you're good to go and migrate on NSE main board. And we've already witnessed this journey by 101 companies who have successfully migrated to the main board. Another feature for investors, thinking about investors, the regulatory framework distinctly specified that you cannot have a SME trading in a single share lot size. So there has been a minimum lot size of 1 lakh and above, which ensures that you have informed investors participating in this segment. So again, it's meant to offer as an asset class to people who are ready to have a higher risk, higher reward kind of investing philosophy. Jesh, can we move to the next slide? Yeah. So what it takes for a company to list onto the NSE merge platform. Well, the important is meeting the eligibility criteria on paper, but I think the primarily is that you meet the eligibility criteria, but most importantly, the psychological factor that makes a decision for a person to be a listed entity is the mindset change of the promoter. So, and mindset change of the corporate behavior at all, absolutely completely together. So what it takes to list on NSE merge is, first you need to be eligible. Once you decide that you are eligible and you're ready to go and list on the NSE merge platform, you need to engage with an intermediary who will help you walk the path, while NSE also is walking with you throughout this process, simplifying the journey for you and having you seamlessly navigate from being an unlisted entity to a public limited company and a listed company. We will also be there with you. So you need to engage with an intermediary, the merchant banker, who would do the due diligence on you, who would help you appoint the other intermediaries required to have a completely successful IPO. And once the DRHP is prepared, they will file it with the exchange. The exchange will do its own independent due diligence, will completely do a site visit, also meet the promoters, talk to them, understand the business model. And on satisfaction of all these processes, we would issue our in-principle approval and the company is good to launch its IPO. The IPO stays open for 3 days. And after 6th day of closing, the company gets listed onto the eMerge platform. So it's a very simple process, and I assure you that Jayesh and me and a team across the region is there to help you through this entire process. So if this process looks like a 7-step process, it's not a difficult process, and there is a team at NSE and there's a team of merchant bankers who are ready to help you walk this path very seamlessly and smoothly. you know what can make you list. You also know how you can list. But it's important, the next important question is, what do I get if I list? And the other important feature is that, there are galores of benefit that's available to a company being a listed entity, whether it's on the main board, on the SME, or on the SME platform. But to touch upon few very sharply is the fact that, yes, a company which is listed onto the eMERGE platform gets higher visibility because they are amongst their peers who are in the listed space. And obviously being in the listed space, being in the regulated space adds a lot of credibility to them. And this go in hand with the credibility and visibility leads to actually higher confidence amongst all the stakeholders. And the company is able to enjoy not only business opportunities and networking opportunities, but also other opportunities like mergers and acquisitions, or in fact partnerships with the marquee names in case they need to progress their business in other continents or districts or in other countries as well. Another important feature that this another benefit that the eMERGE platform provides is that it helps you have an appropriate valuation. It is a journey of wealth creation. So, the moment you are a listed entity, you have a valuation attached to your company, and that valuation gets reflected into the shareholding of the promoter in his individual capacity also. So you're able to actually derive an appropriate valuation and benefit out of being a listed entity. We've seen most of the marquee names and most of the rich people across the world are not by the virtue of their individual fortune, but it's by the virtue of their market capitalization of the listed entities. So I think it's a wonderful way of doing wealth creation, beginning journey of a wealth creation for the promoter as well as for the other stakeholders involved in this whole process, and majorly the investors. Migration to the main board, I've already explained, a very important feature. Corporate governance, yes, a listed entity has to follow several corporate governance norms, and it adds a lot of confidence amongst the various stakeholders that, yes, being a listed entity, it has corporate governance structure in place, and which will help me derive a lot of confidence before making an investing decision into this company. Value proposition, again, a lot of companies have come back and informed us that borrowing terms have been considerably, relatively easier for them when they are a listed entity. Their engagement with the banks differ when it's a listed entity than being an unlisted entity. So it's a I would say, it's something which all the promoters listed on NSE have come back and vouched for, that they've got banking terms better than being an unlisted entity after they got listed onto the eMERGE platform. So now I think, it's an important, because having better banking terms directly impacts your and brings a higher bottom line. And that's a direct impact that you can see on your balance sheet, profit and loss account, and which the shareholders also will be able to see and quickly think that, yes, how we can, this company will grow out of pumping in equity into their own businesses and having higher margins. And always, equity is kind of complementary to the debt. You cannot have a business built completely on debt. It's important to have a component of equity. So this debt equity ratio always helps in having a better leverage and attracting the right kind of capital at the right time, right stage of the company life cycle. Another important feature is you can actually use shares as your collateral. In case you need funding requirements, you can go and pledge with a bank, and you can actually use it as a collateral and fund your business again. So it's like kind of it kind of adds on a benefit of being a listed entity, that, you have already raised funds and you're able to, it opens up one more avenue of raising funds to you. High caliber employees you're able to retain by having an ESOP model if you're a listed company. And you'll be also able to retain talent, not only hire talent, but also retain talent because of the shares being listed. You can offer ESOPs, which will provide quite an incentive for a person to come and join an organization. It opens up various avenues of access to wider capital. NSE, in its ongoing initiatives to engage more and more with the SMEs, would engage a lot with various bodies, associations, conduct conclaves, engage on a one-to-one with industry bodies, so that, we reach out to not only tier 1, but tier 2 and tier 3 cities as well, because a lot of entrepreneur spirit in India is sitting in this tier 2 and tier 3 cities, not aware exactly of, what are the various schemes, what are the various avenues that have been put in place for them to tap it. whether it's the banking or it's the equity market. So we, in our endeavor to reach out to them, partner with a lot of industry associations and help them create more awareness about this platform. ThinkTank today has been very kind to give us this opportunity, and we reach out to the network members of ThinkTank and help them to understand not only as what is an advantage of being a listed entity as an entrepreneur, but ThinkTank also has large marquee investors to it, so they know that there is one more asset class, which is a very, very worthy asset class of taking an informed decision and investing in an SME, emerge SME companies.
Rachna, your voice is not coming.
I'm sorry, I got disconnected. I'm so sorry. Am I audible and visible now?
Yeah.
Okay, sorry about that. And we do a lot of, we engage a lot with chartered accountants and company secretaries, because we've realized that they're an important pillar in the decision making for a company to take a leap of faith and list themselves onto the Emerge platform. So that's how we do it. And we also have an Emerge index that is a feel-good factor for all the entrepreneurs, that yes, the company is a part of an important index, which is the Nifty Emerge, SME Emerge Index. So it's progressing fairly well, and I think it has it's indicated the growth of SME companies. It's a only view index. It's not a tradable product as of now, but it's a very most tracked also to see how the SME segment has been performing over a period of time. And that's it from my side. And I'll be more than happy to take any questions. And if required, I can also share some practical examples for the participants here to know more on this platform, to know more about this platform. Manoj, over to you.
A fantastic presentation. The chart you are having on the screen now clearly shows the type of progress, tangible results, and a curve which is going up and up with the India growth story.
Yes.
In fact, it shows also in pandemic time, when there was a total global crisis in financial markets at Wall Street and other exchanges, people did not go bankrupt as happened on Wall Street, which got supported by the stimulus. Here, more and more companies are getting listed, and the chart shows in just about 4 or 5 years, right? It's about 4.5 years. Over about 400% growth. So, on simple terms, 100% per annum, and CAGR terms over 50% CAGR, which is indeed a proud, even if you are able to achieve 10 to 12% CAGR growth on a sustainable basis, it is good. But as you said, this is not a tradable product. So there are many who need a diversified basket, and they need to invest in certain scripts. They need to track it. Hopefully, very soon, other exchanges or mutual funds, ETFs, should be bold enough and to say they are, let us say, having a small ETF fund for Nifty SME Emerge, even if it is a 50 crore fund. People can invest X amount, and that will be the day it can really take it off. I hope that day comes soon, and I hope you'll have more indexes, also more indices, and much more data available, which will be shared on a regular basis. It is quite interesting. You mentioned about a monthly CXO meets. ThinkTank has been doing since over 2 decades, bringing CEOs, CFOs, specialists with global experiences together. And now, incidentally, due to pandemic, it is happening regularly every Saturday, getting CEOs and specialists together. Onali, you are there? Onali Rupani.
Yes, am I audible?
Anil.
Yeah,
Anil.
Onali, a think tank veteran and globe trotting. Including last week, he was an ex-financial capital of the world, London. Hopefully, the financial capital will be shifting to Bombay. The geopolitical situation changes. Onali suggested a teeth, especially with Rachna on this. Onali, over to you.
Thank you, Manoj ji. And it's always a pleasure interacting with Rachna ji, Jayesh, and the entire team of NSE Emerge. And I must compliment Rachna ji. And please pardon me, I'm going to be very informal in my approach because whatever comes from heart does not find formal words. So I'll be speaking right from my heart, though it's a business forum. I have tremendous respect for Rachna ji, especially in the light when the SME issues were treated as Janta Darbar, where anybody and everybody could come in and raise funds, and the message that was given out to the promoters and investors that it's very easy to raise funds without having any much accountability, hand holding, proper corporate governance. And we saw a plethora of SME IPOs coming in and destroying investor wealth, and that we have experienced. In that light, Rachna ji, being an amazing leader, resisted that mediocrity and kept her foot and eyes on the clear goal that only excellence would be promoted. And it definitely takes a character of a person to resist temptations and resist the competition, especially when NSE Emerge had the legacy with it, and they could have really done amazingly well from the starting point. Yet they resisted and they made this an exclusive club. So Rachna ji, my compliments to you and more power to you going forward, and please continue with the same stringent norms that you have adhered to so far, so that the investor money is protected. Because as much as promoters are important coming ahead and raising funds, the investor money, which is a hard-earned money of the small investors, is also protected, and it is not diluted at any point of time. So my compliments to you.
Yeah. Thanks, Anil. Thanks. Well appreciated. And we'll continue in our endeavor to have credibility of this platform as our topmost priority. Thank you so much.
And Jayesh, thank you so much for supporting Rachna ji in all her endeavors.
Yeah, thanks.
Yeah. And Rachna ji, as I said, I will not be speaking from my brain. I'll be speaking from my heart. And a lady like you only could lead this team so well. And I am not gender biased, but I have a strong belief, and I am deep rooted in the Indian or Sanatan culture, which says that the goddess of power is a lady, goddess of wisdom is a lady, and goddess of resources, which is for SME, is also a lady. So only a lady like you could take the right leadership ahead. And I truly mean it. So these are not adjectives that come out. This is because of the 10-year progress. So you have a report card in front of you, and no accolades, medals, or labels or increments can actually show the kind of effort that you put in. But this is the real compliment that comes from people like us who are from the industry. And I have personal experience dealing with the team, Rachna ji and Jayesh ji and the others also, while getting MMP on the board, which has now moved to the main board, and then Synergy Green, who was listed on the BSC platform, but yet it came on NSE after the listing, and it was a wonderful experience. So this is the point that I want to share. The team means business. The team means it supports excellence, and they have never diluted their value principles. That's the most important factor that any investment banker, any company or an investor looks for, and you have delivered that. Now, if you may allow me, I have few suggestion come questions. Actually, it's a paradox that you cannot have a question and a suggestion coming together, because if you have a question in your mind, you are obviously ignorant, and if you have a suggestion in your mind, that means you have an answer with you. So Okay, but I'm going to make an attempt to make it more interesting. Rachna ji, we have this tagline, which I am absolutely very impressed with for NSE Emerge, that says, "Saath hamara, safalta aapki." Right? And we have made a very beautiful video on the NSE Emerge, which speaks about the recognition a promoter gets in the marketplace. And I thought it was so very relevant that video, that communication was so very important, that 60-second ad where it gave importance to the promoter. It got recognition in the marketplace, and then he's able to build on the trust of all the stakeholders and take the business to next level. I want to have your views on how did you come up with this ad, how did you come up with this tagline, and how effective that campaign has been so far.
Yeah, so basically, on our tagline is just what we do. It's always about, we've always, like I've said this in our all presentations, that, NSE is committed to help you seamlessly walk the journey. And at the end of the day, it's only about your progress. It's only about your success. When I say yours, it's entrepreneur, and the success of NSE lies in the success of the entrepreneur. So that's it. There's no other motive for NSE here. It's not even a revenue generation model for NSE. SME doesn't earn anything for SMEs, and we are perfectly fine. It's a conscious decision that NSE has taken. So that's the way it is. And I think, ads are meant more to emphasize and to create an awareness that, yes, this is a practical going thing, This is not something which is in theory or on a brochure that's available. It's about that how the entrepreneurs have actually walked the path, and they've not, the thing is, they've not found it complicated, and they didn't feel that, yes, we couldn't achieve what we set out for. So I think that ad is meant only to say that yes, there is an alternate mechanism available, and we should tap that. And at the end of it, success is yours, always yours. It's only we are just the path through which you walk.
Rachna ji, as I said, the goddess of wisdom, this is the pure wisdom at play, in which you have put into practice, is that the true success lies in making others successful. So I think you're following that wisdom very closely, and it's been great interacting with you and learning from you every time. Ma'am, what I was trying to further understand is, we have built the campaign, we have the value system in place. Do you think we can now take it to the world? It's been 10 years now, and can we find some more innovative methods of reaching out to people? I know we have traditionally done what it required, and you explained how you've used different professional agencies to reach out to and take the message ahead. But do you think, is there any other way or any other innovative ideas that you are having on the planning board but not taken it forward, that you would like to share?
Sure. I think one of it, Manoj nailed it, that, we need institutional investors coming into SME segment. We need more and more structured products, which mandate that, yes, people have to look at SME segment. Please put on your parameters. You say that this is what we will look at. This is what an SME company should depict. And I'm sure there are a lot of SME companies, who will fit that bill. But that first step has to come, that yes, we are going to we are keeping this money aside for SME segment, and you'll see a plethora of entrepreneurs eyeing for that piece. I think, we have done MMP Industries, and that there was no dearth of investors when it came to a great, strong, growing company. So I think that's what has to continue as not only a one-off kind of an investment. It has to continue as an ongoing investment for a good SME companies. So one thing I think Manoj has already told, and we've been championing this across the board with the ministry, with the SEBI, and we will see, and we'll persistently even try to continue to engage till we are able to actually get this kind of a mandate or whatever. The second is, what we have always felt is that the moment you have a state government or a treasury, coming in and saying that, yes, I am supporting SME segment, not only through the schemes, but also through the equity investments in the company. So I think Mr. Gadkari made an announcement of a huge corpus fund, which would invest in the equity of companies, but we still have to see a framework coming out of it. So that's something that, we are eagerly wanting to contribute to, work with the government, so that they are able to actually contribute and participate in the growth stories of their own land SME companies. And that will give a lot of investors confidence about treasury participating in the equity of the company. So I think that's another area that we've been talking about. And I think rest innovation is, I think SME segment, anything that investor feels is required in asset class, SME has that, So I think, there are unlimited opportunities in SME segment, and we are more than happy to partner with anybody on that segment to see that how we can have a deeper penetration of reach to entrepreneurs and a higher asset class, a higher investor, larger number of investors looking at it as a very good asset class.
Excellent, Rachna ji. Rachna ji, I must definitely say that more power to you in reaching out to these institutions. And I want to share my experience, I would say, while doing the IPO, because I think that would make sense to the participants who are here, that it's just not a tall claim, or it's not scratching each other's back or talking good about each other. It's actually real business. And this business has actually happened in the most difficult period. When during the pandemic happened and everything, the Pulwama attack happened, and all these things did not deter the confidence of the institutional investors, and they are in the company and they are here to stay for next many years. So sharing the experience, I realized that what these institutional investors were looking at, the attributes that they were looking at, especially were first is high quality promoters with ethical system, promoters who are value creating not only for themselves, but creating value for even the ready to create value for shareholders. Now, there's a very big difference between value creation, because there are promoters who create value for themselves and don't create value for investors. So they wanted value creating promoters for the greater glory of everybody. And once value creation happens, only then wealth creation would follow. So they were looking at first this point. Second, on the financial front, they were looking at if these manufacturing companies, what kind of asset turnover they have. So if the institution invested into that company, can they give 2x, 3x, 4x asset turnover on that capital, which then would mean higher cash flows in the business, better ROCs in the business. If there is an SME sitting anywhere and who's listening to this program, and they have an ROC of upwards of 25, 30, 35, 40, they definitely have a reason to get in touch with the exchange or the nearest or your investment banker, and you can actually approach capital markets. The other thing that they looked at is whether there was proper corporate governance in the company. If the corporate governance was in place, if the professionals were in place, institutional money is here and ready. In fact, they are searching. In fact, when I had a dialogue with them and I asked them what do they want, rather than we offering them, my style was that to ask them what were they looking for. And here are a few things that they said. First, they wanted to participate in certain sectors. In certain sectors. Yeah, I think it's echoing. So the sectors that they liked were green energy, EV, organic food, nutraceuticals, pharma, IT services, telecom, animation, etc. These are the spaces that they were really very excited to participate in the SME IPOs. And they said if the sectors are right, if the promoters are quality, and if their balance sheet is having a healthy cash flow, they would definitely stretch their neck and make the investment. So this is the criteria they set forward. And as you are aware, even I am been scouting these investors for last so many years, and there has been very little success, I would say. But then the effort will go on. Also, the other point that I wanted to share, or understand in detail from you, is the NSE Emerge Index. I understand, as you explained, it's only view only. It's not trading right now. My sense is, I'll explain you the problem, and probably you know the problem, but I'm just highlighting the problem once again, so that we, through this discussion, find out some solution. for somebody who has to invest 2 lakh rupees in one company and take a bet on a single company, it is not very prudent for a retail investor. So generally they build a basket of 20, 25 stocks. Now, if I say somebody has to build a 25 stock portfolio of SME companies, he would need 25 into 2 lakh, that is 50 lakh rupees to be kept aside. Now, 50 lakh is a large sum for any retail investor. And if as an investment banker or a wealth advisor, we tell this investor that only 10% has to go to SME, rest he has to put into other asset classes. That means that investors should have at least 5 crore to start with. Only then they can look at SME platform. So this has become a very important deterrent. Though we are trying to promote this to retail investors, explain them that the index is performing, there has been wealth creation happening over there, but mostly the public or the retail investors have missed this because of the allocation fund. Now, what could an exchange traded fund or index would solve this problem is, I can invest as little as 50,000 rupees or 1 lakh rupees in the index. Okay, if the lot is kept smaller, what it would do is it would give him the basket investment for the same 25 companies which have been selected by NSE's team. Okay, but his ticket size now would reduce from 50 lakh rupees to a smaller sum as 50,000 rupees or 1 lakh rupees, giving him higher participation in the entire game. So my first suggestion or request is try hard to get this index tradable. And once this is tradable, I assure you, the AIFs, the mutual funds, the PMS funds, everybody will start participating in this exchange. I know it's not easy on the regulators' side to get this 25 companies in place, because the flow of funds can be very large and it can create a huge impact cost in the market also. But then after 10 years, we have to get ready for this kind of a event. And only then more and more people will participate, more and more companies will get excited. And what it would do is, among these 101 companies that have come to main board, they will strive forward to get into the index. And that itself will enhance the wealth creation process. So this is a suggestion. And I also invite your thoughts and, what are the challenges that you face in implementing this? I would love to hear from you. I think Rachna ji had an issue with the Jayesh, you want to take this question?
Yeah, sure, Anil. Right now, the index is the viewable only, that is the thematical index. The major reason why it has not been started in the tradable form was majorly the companies when they are at the growth stage, they are migrating from this SME platform to the main board. So that time we have seen that's the little downfall in the index. But yeah, we tried very hard and we are continuing trying it with the regulators also. If we can develop this market where we can reduce the lot size maybe to the tune of 50,000 or 10,000, so that once the company are ready, once the company have been already there on the platform for 1 year or 1.5 years, their 2.5 yearly financials are in place, so they can continue to be on the SME platform with the lower lot size. The major advantage what we see, the company wants to migrate because of the reduction in the lot size to 1 unit, so that more and more investors can participate. And that's the time when we have seen a lot of investor coming in the company also.
Absolutely, Jayesh.
But yeah, we are trying with the regulators also. Yeah, Rachna.
So on, actually what we all know that secondary market liquidity sometimes takes a hit at the SME segment because of the lot size. And somewhere, you for an active index, you need to have a real high liquidity, that's one thing. And second is, again, an important consideration that we have to give is information dissemination. It's happening at a periodicity which is much higher, 6 months. So that's again, information availability also would play an important role in getting the index to be up and running on a tradable product. So I think the maturity of SME segment first with the 144 companies only on the SME segment, with 100 migrating. Again, SME index, we need to have a larger base as well, again. So I think, we are thinking in those directions, but I think a little more information would be available. And I think when the SME segment is actually geared up for all those informations and we see higher liquidity, I'm sure, this is going to be one of the important indices that people would be not only tracking, but wanting to take a position also on.
Ma'am, I have some suggestions to solve this problem, because I feel this is the biggest key which will solve many problems on liquidity, participation, and in taking the message ahead. Are we not treating the companies just like a trophy, the companies that have moved to main board, where we use them saying that, 101 have moved to main board, but now they are now lost again in the jungle somewhere. Okay, I understand that they have got the momentum on their side with 2-3 years with the initial SME handholding. But what I feel is, in the index, there is no harm in taking these companies which have migrated to the main board, because they originated from SME. They can still be part of the SME index. Okay, and that can be made very clear that, say, 50% participation can be to these companies. And once they reach a market cap of, say, 1,000 crore or 2,000 crore, where they find eligibility in the small cap and mid cap and micro cap world, then they can be removed out of the index. Okay, and this index management can be professionally done through an agency. NSE knows how to do it. Nifty has been the greatest success this country has ever seen in the exchange history, I could say. And who better than you guys can come up with this solution? You have done it in Nifty, and I think you can take the leadership now and convert this. See, rather than following others, the true leadership is in creating on your own path, and you already have the legacy with you. I think you guys can really do it if you take this thing as a challenge, and it will transform, because most of the funds that I talk to are only waiting because there isn't enough participation and liquidity. And they don't want to take that bet of risk, because you understand liquidity is an important criteria in their document, the offer document that they make. So anyway, so I want to rest this point here. I think we've made this point. Rachna ji, how about creating a database of the emerging sectors? Like I mentioned, few of them when I did the survey with around 170 fund managers, and this is the list of sectors that they gave me. What we could do is we can have a broader research done and survey done, and we can ask these 500 to 800 fund managers that what kind of companies or sectors that they would like to invest in. And once they give us that list, okay, through the survey, we can then go and hunt top 10 companies from the SME segment on the basis of the GST returns that we have. Say in nutraceuticals, today there is a huge demand for nutraceuticals, huge demand for organic food and food distribution. Okay, EVs, batteries, and you see, if you see the two-wheeler segment today, you will be surprised. The Bajaj and the Heroes are not doing so well, but there are small EV companies who have launched their product, and they are competing with the top three. And this is exactly what entrepreneurship is all about. Okay, and this is all about innovation. So if in every sector we are able to identify 10 companies which are not listed but are capable and are doing some fantastic work, and then approach them, and then do a program where we have a sector-oriented kind of a event, and invite these fund managers on a virtual platform so that more and more people can join in rather than physical one, and then encourage the promoters to come forward. What that would do is, they will build that relationship. And once these, I think there's a disconnect today between a promoter and the institution. And I'm sorry to say, despite being in the same industry, as an investment banker, even I have failed to create that connect. I have tried my best to create that connect between the promoter and the institution, but somehow, because of the previous experiences, they have deterred. But if an agency like NSE starts creating this platform, or starts providing this platform, I think we are here for really good times. And if Indian economy is going to move from 3 trillion to, say, 5 trillion, 7 trillion, 10 trillion, SMEs is where the focus has to be. This is truly nation building. This is true nationalism, according to me. And we all should come forward and take up these suggestions and move forward. So these are my few thoughts. I would request you to respond to whatever we've spoken so far and concluded.
Ma'am, can I ask a question?
Yeah, please do. Please do.
Yeah. See, about more than 95% of the SME segment is either with family business. You may be agreeing with that, right? So even though you might have, first of all, I should thank you for having very informative presentation. But in fact, you might have covered this. But yes, I want to just give more importance to that. Corporate governance and reporting requirement of SEBI and everything is not a cup of family run business. So what kind of initiative from your side as a SME platform you are taking to educate more and more people to attract to this market and come those companies which are running very well, and even though they are finding it difficult for more reporting requirement and specifically quarterly result, in-days requirement, there are so many things which has to be reported on a quarterly basis or periodical basis. So what kind of educative initiatives are being taken from SME platform?
Do you want to respond to some bad respond to this?
Hello.
I think she has got a connection issue, some poor connection.
Sure.
So Jay, please. Please. Yeah, please, ma'am. Go ahead.
Yeah. So basically, Mr. Hemant, right? Yeah.
Yeah, Rachna, Hemant. Yeah, Hemant.
Yeah. Jesh, please respond, please.
Yeah, okay. So Hemantji, what you have said, we have seen the SMEs which are coming on the platform are majorly on the family-owned business, and they are not in the form that they are being prepared for the, or they are prepared for doing the corporate compliances and everything. But as an exchange, when we are meeting, when we are doing the awareness session, we also conduct the post-listing compliances session for all our listed companies. And even like today, you might not have a company secretary on a payroll for you. But once the company gets listed, they have been on the payroll, which takes care of all the compliances. So as on today, you must be taking the bank funding also. But for the bank funding also, you need to give various financial data to the banks on the quarterly basis. Though they are not audited ones, but the unaudited ones. So it's not like you are not ready with that. It's only to be on the professional manner. Like when you are going to the market, the investors are investing in your company. They are just asking you to grow the business. They are not getting any interest return on that. In fact, when you are taking the loan, you need to pay to the bank in the bank back in the form of loan and the repayment of the principal amount also. Whether the business runs or not, irrespective of that, it continues. But when you are taking raising funds from the investor, that is interest-free fund which have been raised from the market. But in return, we need to show the growth performance to the investors who have shown faith in the company. So at action level, we are trying to do a lot of awareness with respect to the corporate governance, which needs to be taken care or which needs to be fulfilled by the companies.
Yeah, because see, I have already observed that there are more than 25 or 50 lakhs of SME registered with the SME department, but the companies coming to this platform are still not that much, So the initiative to be that I think you are taking is good.
Hemantji, just to answer that if you will see our main board platform, only 2,000 companies have been listed. So the number of companies are many more in India, and SMEs are tremendously more, but obvious. But the thing is, it's about the mindset. When we are approaching, we have almost met more than 10,000 entrepreneurs who are either on the family-owned business or running professionally and everything. But the major is to change the mindset. Yeah, we are prepared, we can go in a public market. It's not only the governance part only. So a lot of relaxation has been given in the LODR to the SME companies. But once you migrate on the main board platform, it continues. You need to fulfill, you need to take care of all the LODR requirement. But there are, regulator have told there are lot of relaxation given to the SME companies. So it's only the mindset change. So you will not believe, when we are meeting the entrepreneurs, the first question is how much time we will take to list our company. So the process is very simple, and Poon will agree with me on this. It's hardly matter of 3 to 4 months when your company can get listed on the platform. But the major time taken is to prepare, to be ready to prepare your mind to come on the platform. So today we are also in touch with the company with whom we have met in 2014 and 13. Somebody have came on the platform and somebody are still thinking what's the right time.
So the market is very huge,
Yes. Yes.
Market is very huge.
So we are trying our level best. Yeah, we are trying our level best to spread awareness. That's why we are here continuing our awareness approach about the platform.
Jayesh, I want to add one more point for Hemant Bhai to understand. He has a very valid point on when he says there are family-run businesses. India has been a family-run businesses. India has been a capital for entrepreneurship. Somehow that entrepreneurship was lost out in certain time when job creation or job market were more highlighted. But if you really see, the entrepreneurship worm exists in every Indian somewhere. Okay. But having said that, coming to the issue that we have is, there is going to be a family-run system, which is actually a very healthy system, because you have the stakeholders who have their interest deep-rooted in the company, right? But we need professionals today. We need accounting professionals. We need compliance professionals. And what happens is, once these companies, family-run companies, start growing, there are a couple of issues that it faces, like succession. Now, sometimes you don't find succession in well-run family companies. So they have no choice but to make it a professional company. Also, the ESOP model is an amazing model that can be utilized by a family-run company which wants to transform into or want to continue the company in form of a legacy or an institution. So ESOPs is a good idea. Getting professionals on board is a good idea. And you are going to get investors, right? Once you take care of your interest, you are going to take care of the minority interest also. So there is no harm. So compliance is not that difficult. As Jayesh rightly said, and I can endorse this, and let me tell you, I have not been paid a single penny by any of the exchanges to say this. This is a pure feedback and a genuine feedback, okay? NSE would turn around very quickly. They will tell you the deficiencies that you have in your offer document, okay? They will handhold you. They will explain you. The audit systems are stringent, it is very important with the retail investor point of view, but it handholds every promoter, okay, which is very important. Then once you have a listing, people feel somehow that the compliances are very high. I'm sorry, they aren't. Once you have the professionals in place, the professionals know what the compliances are. So you don't have to worry about it. And you get a 2-year window to understand these compliances better. Most of the compliances are relaxed. And I would tell you, the companies that we got associated with, they raised the bar. In fact, I want to share this when we talk about family as an issue. In MMP IPO, it was the first IPO on NSE where we had an anchor portion fixed, which has never ever happened, or which of course was then taken as a precedence, and later it happened. But till that point of time in 2018, I still remember it was 27th or 28th March 2018, exactly 4 years back. And we had an anchor portion where institutions participated in that program, in the IPO. So we had an anchor book, and after the anchor book, we had the IPO open for public. So if the company is good, you have professionals with you, getting funds is going to be much, much easier. It's just that the mindset has to be built. So you first contact an investment banker, spend some 6 months, 9 months, a year preparing for the IPO, then connect with the exchange, and then take this forward. I think that is a seamless route, and NSE is here to help and handhold the promoters. And it does not matter whether you're family run or professionally run. It's just that you need to have few things in place. Once those things are in place, you can easily get listed on the exchange.
Thank you.
Thank you.
Rachna, Jayesh, you are there?
Yeah, I'm
One
there.
quick question from you. Jayesh, what is the contribution of MSMEs to the GDP of India, percentage-wise?
So I guess it's around 37 or 47%, something like that.
Okay, get a precise number. Rachna, you are there? Very, very important question. Rachna, we are waiting for you.
I think Rachna is traveling.
I guess she is in the bad network, sir.
Okay, now I'll come to that. You
Yeah.
said X over 40%, right?
Yeah.
It's 30% actually.
Over?
It's 30%. 30.
30. Yeah.
I told her
Because,
37.
you are the CEO.
Yeah.
Now, what is the goal of India short term in terms of market cap? GDP, 5 trillion, right?
Yes.
5 trillion US dollars, right? And today, what is the market cap? What is the GDP today?
3 trillion.
3 trillion, I guess. Yeah.
3 trillion today.
Fine. We are just taking and rounding it off. 3 trillion. And in markets like this, market cap to GDP multiple is about ranging between 1 to 2. In bullish times, about maybe 1.5. So that means opportunity of $7.5 trillion market cap based on 5 trillion. And on current 3 trillion, maybe about 4.5. And as Jay said, 40%, Vikas said 30% based on the statistics, how you define M and SM and M and E and startups. Opportunity, blue sky for SME, MSME exchange can go up to $1 trillion, right? Market cap. Jayesh, you agree with me?
Yeah, sir.
$1 trillion.
It's possible.
Yes.
Jayji,
Now tell me,
Manish,
you share with
Manish.
Rachna also, is your index, it is one odd index, ultimately you will be having a range of indexes. Is it updated on a second to second basis?
Sir, like
NSE
this
emerged,
thematical
SME,
index we publish on a monthly basis, sir.
But is it updated on a second to second basis?
No,
Yeah.
no,
No.
no. It's at the day end it gets populated.
Yeah.
So it is?
Am I audible? It is populated on a
Rachna,
day end.
Rachna. Yeah.
Yeah, it gets populated at the day end.
Yeah.
Day and every day. Okay. I was asking Jayesh, what is the contribution of MSME to India's GDP?
So 30,
What is
35,
your number?
30, 35.
Great. That's what Vikas also said. Yeah. So today, Onali said our GDP is $3 trillion with aspiration of $5 trillion soon, which has been announced by the government. And in bull scenarios like this, market cap to GDP is about ranging between 1 to 2, multiple, possibly 1.5. That means as of today, there can be a $4.5 trillion market cap. 30% rightly can go to MSMEs. And you are a leading product. So opportunity of $1 trillion market cap is there, which all of us collectively, globally, who support the India growth study need to work on it. In fact, I am wondering whether you are ready Monday morning, current Monday, day after tomorrow, or let us say 1st April, not really April Fool's day, but on market, on TV, CNBC, TV 18 or Z Media, you should get this channel in the morning, 9 o'clock pre-opening, updated second to second. I don't know how long it will take. It can take 1 month, maybe 3 months, but it is possible because today we are digital technology is there. You are updating, maybe you are doing a due diligence, it's a new index, but also you have a 4.5 years history. Once Z Media, your CNBC, and also the international latest digital sites, whether investing or investing or trading views or whatever, minute to minute you get updates. The investor goes, he says, sees a Nifty 50, your mid-cap index, small cap index, Sensex, NSE emerge. I wonder how long that will take.
And
whether you aspire to do it, I'm sure you'll get full support from the media because they need the content. And I'm sure your MSc minister at the Union Ministry will also help you. If you need, we can help you get connected together. Because it is aspiration, it helps the India growth story.
Thanks, Mr. Manoj. And actually, after the immense success of mid-cap index, this is something that we've all been looking at. But I think when the time is right, we have a very professional indices team who will be lapping up this opportunity. And I will surely pass on his suggestion to them as well, Mr. Manoj.
Great. I would love it. It comes before the NSE IPO. So NSE IPO will get a much higher valuation. And if NSE gets a higher valuation, India will get a higher valuation. We always say think tank India growth story. We have got 1,000 highly competent speakers in think tank all over the world.
Great.
There's a queue of speakers who contribute globally, but ultimately the objective is look at it positively, and it can happen. I would request Vikas, you are there?
Yeah, I'm here.
Vikas, a few thoughts from you. You have now Rachna, Jayesh, Aman has been looking at the equity part of it, equity risk capital. It gives rewards. Now you have been looking at the second aspect. Ultimately, you have to have a lenders, you have to have appropriate mix of equity and debt. Not only that, on SME, you got so much experience. Now you have got keen interest in fintech and debt also. Your take on India growth story on SMEs briefly, and then I would request Nitin is here. Nitin has worked as a head of research with SME Keynote, which works on he would come out some critical issues from research and professional angle. Yeah, Vikas.
Thanks, Manoj. Thanks. From 2010, I am supporting to SMEs into their fundraising. Earlier for 10 years, almost till 2019, I was into debt fundraising. Then after that, I started NBFC. So in that also, means we are as a lender to SMEs only. Just to understand that, first we should know about how these SMEs, like from last 1,000 years in India, there was like people were doing micro and small businesses in terms of manufacturing services, and it covers almost 33% of the GDP in all over world, actually, whatever the India has contributed that time. Then there was British and Mughal invasion, and later it means like it has been destroyed. And now again, after post independence, things has been started on SME side, and more than 6 crore SMEs are into India, and 95% are less than 5 crore turnover, but there are almost 6 crore SMEs, and they are employing more than 11 crore people, and 30% contributing to GDP, more than 40% in export. So SMEs are really doing good in that way. So what is the problems of SMEs? We need to understand first. Okay, so as a hard skills, they know about production and engineering, but as a soft skills, like you can say market linkage, sales and marketing, that's a very where they need the help. So I term it as a three goddess, what they need. First is like Saraswati. Saraswati is like a intellectual, whereas they need commercial for the commercial prudence, they need the market linkage. They have idea, they need the execution for that. And second I term as a finance is Lakshmi, as a power of finance. So as like we are getting from debt and equity, both things are there. And third is spiritual, like Durga, that you may mention as a like a mentoring. They want mentorship. So I mean finance, mentorship, and market linkage. These three things the SME needs. And I mean NSE also should start SME education program, I think, where they can onboard the industry leaders for the market linkage, financial professionals for the compliance and for the mentoring purpose, and finance, of course, they are providing. So I mean this would be the combination of all these three, and this will give a lot of coverage to these MSMEs, and they will be coming on the onboard, and we will have the future of like 1.5 trillion as a market cap for these MSMEs also, right? So again, how the education is very important for any MSME. So execution, like I always say, don't underestimate the power of execution. Execution is very much important. So everyone has to do the execution in right spirit. And then compliance is very much important for the MSMEs. Like there is no shortcut. There should be a there should be compliance. If you are not complied, then you will not be able to sustain in the market, right? And then you should have 100% involvement into the business. You should have 100% involvement. You should capture all these things. And then investors' money is very, I mean, you should use with respect, and you should have that investors' ka money, or maybe the this bankers' ka money, that is whatever the debt or equity, you should use with the respect. So I mean, these SME should take care all of these things, okay? And they should have a good team. And yeah, if we have all these things, and I have many more things like 3 I's: integrity, insights, and inclusion. Okay, all these 3 things also they should have. So if SMEs have all such things, they should surely they will grow, and they will have a, I mean, $1.5 trillion market also. Manoj, all these things I can share. Thank you.
Thank you, Vikas. Rachna? Jayesh?
Jayesh is here.
Nitin? Nitin, you are there?
Yes, I'm here.
Yeah, Nitin, your thoughts from a research perspective and a professional perspective. Before that, I would like to you to share a few words about yourself, your qualification, and your type of experience.
Sure, Manojji.
Yes.
Thanks, everyone. Thanks for the opportunity, and nice to interact with NSE team here. So I'm Chartered Accountant Nitin Khankar. I qualified as a CA back in 1995, and I've spent my entire career in the capital market itself, mostly on the sell side, writing institutional research reports and dealing with institutions. For the last few years, I've been mostly a proprietary investor. And as they say, once an analyst, always an analyst, so that writing tech has not really gone away. So I keep writing some bit of theme-based reports, but I do not make any stock-specific recommendations. And I have some observations about the Emerge exchange. So with the moderator's permission, I would like to give a very brief presentation and ask my question.
It's a self-moderated, go specifically into issues from research angle. Yes. And because you have been a head of research with a stockbroking firm, a listed firm, which used to claim it specializes in small caps. And as a professional, the way you look at listings of SME on the exchanges, very clearly, point by point.
So I would like to share my screen if I would.
No, we are not doing a presentation. You can share your thoughts, you can share your points.
So I'll quickly share my views on the exchange. So
point by point. That will help in the development of the SME market and listings, both.
Yes, so coming to the liquidity part of it, the NSE Emerge Exchange as of yesterday saw trading in about 80 odd stocks, 38% shares not traded. Total market cap was around 13,000 crore. The top 10 companies accounted for 40% of total market cap, and top 15 companies accounted for 50% of the market cap. In terms of total trading volumes, yesterday, 25th of March, the NSE Emerge Exchange reported trading volumes of 30 crore versus market cap of 12,950 or say 13,000 crore. Of these, the top 5 companies by trading volumes accounted for 65% of the trading volumes, which clearly highlights the fact that investors do not appear to be so keen on investing in SME stocks. I also compared the company announcements section with the NSE main board, and I observed that if you go to a specific stock page on the NSE Emerge Exchange, you don't find the announcements there. You have to go to the home page and seek out the corporate announcements. But again, they are given as per the uploads, so one has to physically search for announcements pertaining to a particular company. So they're not in one place as they appear on the main board website. So my comment is that the NSE Emerge Exchange website needs to improve its layout and presentation in terms of data about listed companies. It is cumbersome to access corporate announcements. Historical data about trading volumes does not contain deliverable volumes. In absence of information parity with main board, some investors might resort to unethical means to access information regarding companies they have invested in or wish to consider investing in. Quickly about disclosures, I observed that some SME companies are voluntarily disclosing quarterly results. Can this be made mandatory for all SME companies? Less stringent compliances for the IPO are fine, but once companies list on SME exchanges, they should be made to the same requirements which apply to the main board companies. Apparently, the idea behind SME listings is to enable SMEs to access public funds easily. However, compliances are seen as somewhat less stringent versus the main board companies. Even the terms and conditions for migration to main board seem to be somewhat less stringent, or maybe they have been diluted somewhat, which in my view, I might be wrong, please correct me if I'm wrong, but in my view, it gives an easier backdoor access to the main board to SME companies. The regulator needs to consider reducing the IPO size and also the ticket size or the market or the lot size for trading in SME stocks on listing to bring investors back to SME exchanges. In general, financial disclosures need to improve. As far as migration is concerned, liquidity in SME stocks is generally low versus the main board listed stocks. The only possible exit for investors is if the companies were to be moved or migrated to the main board. So 101 NSE image companies have migrated to the main board of NSE. However, it has been observed that trading volumes of most SME stocks, if not all, do not improve significantly even after migration to the main board, which is even after reduction in the ticket size or the transaction size. These are the comments I have. Thank you.
Yeah, Nitinji, Jayesh here. Just to address few of them, what you have done. Sir, disclosures and the announcement are already available on the NSE Emerge page, and it can be searched by the company's name also.
Jayesh, your video is on, no? Jayesh?
Yeah, one second. Yeah, they are available on the Emerge website, plus also the NSE India homepage also. So you can see the announcement company-wise also, and as and when the announcement are getting uploaded on the platform. So you can see the replica ones on the main board as well as on the Emerge platform, both the places. Sir, pertaining to your thing on the migration of the companies, the criteria what we have kept is that the company should be listed on the Emerge platform for at least 2 years so that they are ready with all the compliances which needs to be taken care. Okay, these companies are coming from a family-owned business to a listed space, so they need to somewhere make a habit of disclosing the things. Yeah, we have seen the companies who are in a better compliance mode have even gone for the quarterly disclosures. But yeah, as per the regulation, currently it's not mandatory. It's voluntarily. The company can even disclose the quarterly compliances also. And additionally, the paid up capital of the company should be 10 crore with the market cap of 25 crore. If the company is fulfilling these three criteria, the company is eligible to move on the main board platform. But of course, at the time of making the application to the exchange, we also see whether certain hygiene checks internally, and then only we allow the company to get migrate on the main board platform.
Jayesh, how many SMEs are there in the country?
So there might be crores, sir.
Crores. Okay. Now, if we just
Not
take
exactly.
if we just take 5 lakh SMEs,
Yeah.
you said you are
crore,
crores, right?
6 crore.
There are quires of entrepreneurs, right? Which numbers? I think somebody gave a number.
6 crore.
6 crore hai. Out of that, 30 lakhs is the more than 5 crore turnover.
Yeah.
Okay, 30 lakhs is more than 5 crore turnover. 30 lakhs, right? Now we just take 10 lakhs. 10 lakhs. And we talked about NSE emerge 0 to 10 crores equity, correct?
Yes.
So assume, let us say 5 crores. And now Vikas is a master in funding debt also. And he would certainly say, you take debt from me, if not 2:1, 1:1, right? Minimum, that is conservative. And you are getting at a very attractive cost today, whatever is the cost ranging from 7% to 12%, 13% based on the rating and you do due diligence. So that is 10 crores. 10 crores into 10 lakhs, 1 crore. That means how much does it come? 10 lakh crores. And today you gave a number of some 31,000 crores, right?
Or market cap?
Yes.
Yeah, 34.
So that is, we have just achieved only 3 to 4% of the opportunity on a very, very conservative basis. Now,
so
tell
that's why we are spreading the awareness about the platform, and surely we will require support of your all. Because you are the guys who are in touch with the entrepreneur, so you can also encourage them to go for the listing rather than only looking for the traditional method of loan funding.
Certainly.
Yes,
So,
yes,
are you ready for? Are you ready? A very specific. On a conservative basis, we talked about 1 crore. All of them ideally should be listed, and Aon mentioned about 6 to 9 months of preparation, which the investment banker requires. Are you ready for 1,000 to 5,000 companies listing every year?
So we are ready for that.
You are ready today? 1,000 to 5,000 companies ready.
So we are ready today.
So that is really wonderful, because a technology platform needs to be there, plus a due diligence, because you shared in a presentation, you are looking at the deep dive into numbers. Also, operating profit was mentioned in your presentation.
Yes.
It is only not the audited turnover, which you may cross tally with the GST return because of a lot of money laundering issues, allegations about SME listings. It is not just a net profit number which is filed in MCA returns. Net profit numbers are written, certain ratios are filed. Operating profit, that is your criteria.
Correct.
Right? 2 years out of 3 years.
Yeah.
So we don't have the risk of investors getting short-changed due to losses, because that needs a little kind of experience and maturity for investors. So your technology platform plus your due diligence team is ready. You need people, competent people, to see the deep dive into the numbers. And 1 to 5,000 could only be a startup point. Ultimately, you have to reach 1 crore and 3 crores, 10 million, 30 million, 60 million. There is no shortage of money for lending, right, Vikas? Vikas? Vikas, you are there on a network? Okay, Jayesh, what do you say? There is no shortage of money, right? I can say
Yes,
because
sir.
you
If
had some
sir,
IPOs last week.
From the investor point of view, if the companies are ready and at the growth stage, investors are there who are ready to invest in the company.
What is, Jayesh, what is the average level of oversubscription in the last 3 months of the companies which have come for IPOs?
So we have seen lot of subscription level, even in the recently, few of the companies have seen the subscription level to 200 times also.
Right, 100 times is really marvelous. It is the envy of even main board companies.
Yes.
What is the average level of subscription, oversubscription in the last 3 months?
You can say around 20-25, sir.
20-25 times. That means with investors ready to give the money.
Yes.
And tell me, Jayesh, is there a gray market? Like for other companies on main companies, there is a gray bazaar where even you Google the price.
Sir,
also
we have
you
heard
get a gray
about
market.
it. We have heard about it, but don't know exactly, sir.
So the investor don't come based on gray market as they come in some of the other companies in the main stream. You know, merchant bankers are good at creating that hype. Here there is not much of hype on gray market. These are investors who have seen experience for last 4 years. So we have to move to the next stage. And it is good to see we are ready for the opportunity. Maybe due diligence need to be strengthened further. Address cells of about money laundering of some promoters. I don't know what is the percentage. Maybe 5%, 10%. There is always black sheep in everything. Because of that platform, a name comes, but it shows on a consistent basis you are getting good numbers, good oversubscription numbers.
Yes.
So now the time has come. You need to update the indices, come out with more indices, and see your the CNBCs and Z Medias and investing and globally at every on the every channel and platform, you get the growth story. The chart you showed in your presentation gets known. And one should not see after 1 year, suddenly this indexes come, how it is evolving, how new companies are getting added, addition, deletions. It comes on all the channels. That means we are ready for the next stage. And hopefully the market always meets its more demand. When you see mutual fund manager would come to you. Today we had some experiences of DSP mutual fund, right? SME fund. They got money, they had to stop subscription. Should that happen in a country like India? We don't need money. When SMEs are aspiring for money to grow, this is growth capital. And the fund manager says, I don't have companies to invest. And if you can't have companies to invest, you come to NSE Emerge and create a ETF or start investing in that fund. Once they come to you, how long will it take?
Surely we will look at it whenever it is tradable, but right now it's in the viewable stage. Yeah, surely we will speak to our indices team also, how we can look forward for that. Surely we will.
Superb. That is what ThinkTank is about, to see there are interactive conclaves, get views from across the globe, top professionals, and keep on evolving, covering latest developments and solutions. Anil, you are there? Anil Sharma?
Good afternoon, Manoj ji.
Yeah, good afternoon.
Good afternoon. मेरा एक क्वेश्चन है जयेश जी से.
Yeah, just mention your name and your qualification and go ahead.
Okay. सर मैं जिग्नेश लखानी फ्रॉम सूरत, आशार कैपिटल करके मेरा कंपनी है और हम लोग SME IPO कंसल्टेंसी का काम कर रहे हैं. तो जयेश जी कुछ मेरे क्वेश्चन थे कि हम लोग जो छोटी कंपनियां जो है मैन्युफैक्चरिंग, उसके अंदर अपने क्या क्राइटेरिया है जिसको हम SME बोर्ड पे अप्रूव करते हैं?
सर क्राइटेरिया वाइज में ऐसे हमारा क्राइटेरिया सिर्फ यही है कि आपका 3 साल का ट्रैक रिकॉर्ड होना चाहिए, +2 ईयर ऑपरेशनल प्रॉफिट एंड द पॉजिटिव नेटवर्क. But out of the 244 companies which have got listed, we have seen the turnover ranging from as low as 10 crore, and the upside there's no level.
Okay.
Even the 1,000 crore, 1,500 crore companies turnover companies have got listed on the platform. So if you can share with us the balance sheet and the P&L statement of the company, surely we will be able to guide you on the better path.
Okay.
How we can take the things forward.
सर एक दूसरा क्वेश्चन था जयेश जी मेरा कि जो एसएमई के अंदर बीएसई एसएमई में हम लोगों ने जो कंपनी लिस्ट की है उसको माइग्रेशन के टाइम सीधा एनएसई के अंदर माइग्रेट कर सकते हैं, और मैंने मेरी 2-3 कंपनियों के अंदर ऐसा मैंने एक्सपीरियंस किया हुआ है जो बहुत अच्छी कंपनियां हैं, जिसका प्रॉफिट डेट फ्री है, काफी अच्छी कंपनियां है, लेकिन कहीं ना कहीं वो बीएसई की कंपनियां थी, उसकी वजह से एनएसई ने उसको एंटरटेन नहीं किया हुआ है, तो ऐसा मुझे फील हुआ है। तो इसके रिलेटेड आप क्या कहना चाहेंगे प्लीज?
Sir, see, we have the criteria which we have come in January 2021, where we have given the criteria where the company can get eligible. But sir, to be very frank, like at NSE, we believe in the qualitative company. So we say more no to the companies rather than yes when we look at the balance sheet and the P&L statement. So I can't commit you today. It can be we can see the balance sheet and take the things forward. How we can allow the companies to come on our platform. So it's not only, sir, your company might be doing the turnover of whatever amount it is, but the company should also be ready to go and list themselves on the platform.
Okay. सर मैं आपसे डिबेट करना नहीं चाहूंगा, लेकिन एक कंपनी का एग्जांपल देता हूँ। जब हम लोगों ने उसको बीएसई के अंदर लिस्टेड किया था, उसके बाद में जब हम माइग्रेशन पे गए तो उसका जब बीएसई पे लिस्टेड किया था तो 10 करोड़ का टर्नओवर था। जब माइग्रेशन के टाइम 2 साल के बाद उसका 70 करोड़ का टर्नओवर था और 4 करोड़ का प्रॉफिट था। फिर भी बीएसई से हम लोगों को ऐसा आंसर आया कि ये सब मैनिपुलेशन है, पेपर बनाए गए हैं। तो प्रमोटर ने ऐसा डिबेट किया था कि अगर मैं पेपर बिल के अंदर बिल घुमा सकता हूं, लेकिन जो मेरा कंपनी का पावर बिल है, जब मैंने कंपनी चालू किया था यानी 2 साल पहले मेरा 3 लाख रुपए का मंथली पावर बिल, लाइट बिल, टोरेंट का आ रहा था, जो आज 18 लाख रुपया आ रहा है। तो बिल के अंदर मैं मैनिपुलेशन थोड़ी ना कर सकता हूँ जी, पावर बिल के अंदर। फिर भी ये पेपर वर्क वगैरह कोई भी चीज को कंसीडर नहीं किया गया था। फिर हम लोगों ने 7-8 महीना वेट किया और उसके बाद में बीएसई पे उसको माइग्रेट कर दिया।
Sir,
तो
I am
एक
not
मेरी
aware about
रिक्वेस्ट
such company.
जयेश,
नहीं
जयेश
सर, I can't believe on this part.
प्लीज एक मुझे सुन लीजिए। तो मेरा एक सिर्फ आपको ये कहना है कि काफी ऐसी अच्छी कंपनियां हैं जो एनएसई के प्लेटफॉर्म पे आ सकती है। तो एक बार उसको ज्यादा कुछ नहीं, लेकिन पेपर वर्क उसका एक बार देख के फिर उसके बाद में उसके ऊपर हम लोग डिसीजन ले तो काफी अच्छा रहेगा हम लोगों के लिए भी और इन्वेस्टरों के लिए भी, क्योंकि इन्वेस्टरों को कहीं ना कहीं ऐसे एनएसई के प्लेटफॉर्म पे थोड़ा ट्रस्ट है कि अगर एनएसई की कंपनी लिस्ट हुई है तो हम लोग उसके अंदर पैसा डालेंगे।
Surely sir, and even आप जो भी कंपनीज लाते हैं, I guess जिग्नेश जी अपना बात भी हुआ है, if I आपने मेरे को काफी बार फोन भी किया है, what I believe. Yeah. So surely आपके पास कोई भी केस है तो you let us know. If they are eligible to come on NSE, we will definitely take them forward.
Okay. Thank you, Jayesh ji.
But yeah, qualitative work will always required, sir. We believe in that. Even on the main board platform, 2,000 companies are listed on NSE. Some 5,000, 6,000 companies are listed on other exchange. But still, we believe in the qualitative companies to come who are on the growth level, and then we take them forward.
Thank you, Jayesh ji.
Jayesh, are all your RHPs for NSE emerge, are there all shown up properly in a easy user-friendly way on your website?
You can just go on the NSE emerge website, click on public issue offer document. All the offer documents are available over there.
All full RHPs,
everything,
and including
sir.
A synopsis or 2 pages. Application forms are also available.
Sir, application form will be available in the IPO link when the company comes out with the IPO. So there are various documents which are submitted. So
The
they will
summary,
be
so
available in Liquidity.
anybody doesn't have to go
Everything.
through 200 pages, 400 pages.
So
in some 2 or 3.
whatever requirements are there, that documents will be available.
Yeah, so the risk factors of every SME IPO are
Everything,
available in a
everything.
very user-friendly format.
Yeah,
And that data is available since inception.
yeah.
You also have a good monitoring systems for websites of SME, so they put appropriate updates on their websites. Are you able to monitor them?
It's the regulatory requirement which they need to comply with. But sir, it's not possible for each and every, we can't check each and every company's website. But yeah, at the time of the onboarding, we do check that.
Okay. Now, another important point which comes in is there are conference calls which the companies do. Result calls.
Yeah.
Investor presentations.
Yeah.
Now, this trend was started by the companies with the topmost corporate governance.
Sir, it's
And
applicable
ultimately,
everywhere now. So
yeah,
it's
NSE
applicable,
and
even
BSE,
SME companies
I'm
do
talking
that.
about mainline companies.
Sir,
They have
even
started
SME companies
sharing.
do that.
Yeah, they have started sharing on a website. We are doing an investor call, maybe quarterly, and also select people we are meeting. And then they share the presentation on what is the update. Now, here we have seen in NSE that SME companies, the trend of investor calls have started recently. Maybe on Google Meet or Zoom call. But these are not shared on the sites.
No, sir. The announcement are available that because that are the regulatory compliances which needs to be done by the company.
So can you ensure transcripts of last investor calls of all the companies are there, because this will enhance the confidence, people will get latest updates.
So whatever is the regulatory requirement that needs to be followed by the company, and they are uploading on the NIPS portal, which gets on our website.
So those who are not uploading, that means they are doing a clear violation. May not be intentional, may be intentional, right?
So can't comment on that.
So if they are drawn to your attention, then you would see that is better enforcement, because enforcement and compliance is essential for building up the next phase, you know, that the confidence in the thing and higher disclosures.
We have seen many announcements which come across.
Yeah, no, I'm talking specifically about the transcripts.
So transcript, I don't know whether it is a regulatory requirement or not. They need to give the investor presentation and with whom they have done the call.
Okay, and if they have shared any information which is not there already, any further information with investor, that certainly is a regulatory requirement they should certainly share, right?
Yes, yes.
Great, great. So this is hopefully we go to the next stage of your we go the larger vision and expectations there from the SME and the SME team. And we will soon have the next presentation on startup platform of NSE soon, Jayesh, Rachna and yourself. And then we take it forward. So there is continuously ongoing visibility, because that is essential to move to the next stage, where India is the fastest growing company in the world. And this should also be the fastest growing enabler to reach a target of $5 trillion. Now, Anil is a SME practitioner. Anil Sharma, for 30 years experience as a SME practitioner. And also Anil is a part of the JB and ThinkTank, right? Anil, you have been a convener of JB Nagar ThinkTank.
Yes.
And also before that, you are a part of a JB Nagar ThinkTank for how many years you can share, and how you are contributing. And now Anil is coming, besides contributing as a member of a JB and ThinkTank for a long time, also involved in representations on the budget also, right? To the influencers, people who are part of forming opinion in the government. And what better time, Anil, your thoughts on SME practice, and also what everybody can do before 31st March. It's very, very important. Latest developments, 31st March, to improve your health, which health? Tax planning, which health? Material wealth, right? Which is important, and that can be done through tax planning. Computations can always be done after 31st March. Return filings can be done, but we still have got 5 more days, including today, to do further much more efficient, effective planning, and also the latest developments on the parliamentary panel, which has come just 2 days ago on Indian Institute of Accounting, setting benchmarks of the accounting profession with global bodies, US, Europe, IIT, IIMs, taking to the next level. Anil, share your views on that.
Yeah, we'll do that.
And let us make it an interactive session.
Yes,
Here you get solutions. Solutions to make Indian profession world class, as thought about by the parliamentary panel, at which many professional bodies have given their inputs worldwide. And tax planning, efficient planning, including stocks listed on NSE, including stocks delisted on NSE, including IBC, including NCLT cases, including business, including profession. Anil, a few words, please share about yourself, your qualification, your experiences, and your sharing knowledge and experiences.
Thank you, Manoj. Thank you very much. I am Anil Sharma. I am a tax practitioner, chartered accountant by qualification, and have got a client range from manufacturers to service providers to SMEs, even large size companies as well. And we started as tax practitioners, and today also that is our niche where we provide our services. And what our belief is that tax does not start post financial year, it is to be done along the year. That is how we work. And the current development is that government is providing you AIR and AIS and TIS, that is tax information system and this annual information system, whereby all information that the government has in possession is already provided to you in advance. That is particularly for individuals, corporate employees, and others who usually used to just fill the form number 1 with their salary return and ignore all other aspects, like, someone investing in a mutual fund, he switches from one mutual fund to other fund. They don't know that their capital gain already arrives at that point of time. So basically, for tax planning aspect, last year was good for the capital market, and many of the SME individuals and corporate employees have made good money. Now, the only thing is the market has corrected over the last 4 months. So we are liable to pay taxes on basis of our income, which arises from in many ways. One is dividend, which has become taxable. Other is that short-term capital gains, long-term capital gains, then grandfathering of long-term capital gains arising from mutual funds, listed securities, unlisted securities. There is wide range of, now even taxing these incomes have become a little complex process once you adopt, like particularly let us start with say individual who is having salaried income and has been having exposure in the capital market to F&O. Now what happens usually, if they didn't make money or they lost some money, they would not capture this in their return. Now there would be certain tax liabilities arising out of it, or there could be certain benefits arising out of the losses that they make. Now these exercises have to be done as you proceed. Before the financial year ends, you have to pay your advance tax, you have to do everything. Now, particularly thinking of this financial year, that is 21-22, this is assessment year 22-23, we are having a typical year because this time most of the people made money in this market, whereas the market corrected in last 3 months, right, Mr. Manoj? A bit, right. Quite a bit, particularly in wake of the Ukraine-Russia war and all. So now people who made good money are required to pay tax. They should have paid advance tax also. If they have missed on it, then tax planning could be done in one way, that if your stocks have corrected, say 15, 20, 30%, and you wish to hold those stocks for a longer time based on your study of the investment, then probably one way could be that you could book your losses by buying the share and selling it again, say by Monday or maximum Tuesday, and booking your losses, whereas retaining the share. So your current year's tax liability will be postponed to the next year. Now, certain queries that I got before the session from few of our participants was that some people, they are holding shares which got delisted. Now, delisted shares is a very, very typical issue, because when we buy a listed security, we are not a part of the management team. So how to sell those shares is the big question. Now, for delisted shares, unlisted shares rather, 3 sections of the Income Tax Act are attracted. That is, you have to have a valuation report for the shares which you are planning to sell. Then the valuation should not attract section to be taxed, the difference between fair value and the price at which you trade. So you will have to take a valuation report from a approved valuer. Now, how can a person do this for a company where he does not even know who is the management? That is a challenge. But if it is feasible, then because that in future that company may never get listed. If it is feasible, you should approach the management and get a valuation done, and probably you could book those losses against your long-term or short-term, depending on the time frame of your holding, and sell it to persons who are interested to buy. Usually, the management team of the unlisted company are interested to buy such shares. Now, another thing is, people doing F&O trading, I think they are well aware that this is a tax under as business income under the 5 heads of taxation. Now, one benefit of this head is that you are entitled to claim all expenses connected with the transaction, as well as, say, we are doing our trading in F&O from our home. Then probably our air condition bill we could debit, even claim depreciation on our air conditioners, part payment of our society charges, even the house help 50% expenses you can claim. And the best part is section 44AD is available to those who made money in F&O. They can list out the expenses which they have done based on supporting papers, even though you are not required to maintain books, but your cash flow should not suggest that you are claiming expenses which you have not incurred. So based on that, you could go for the presumptive route and declare 8%, 6%, or 20% or 25%, and the same taxes on your income, which otherwise would have gone to your drawing. And in case you have made loss, then you are required to get your books audited. In that case, you will have to maintain your books, but the advantage will be that you will have income under other heads, like capital gains, income from house property, other sources, they will get set off. Now, part of the planning can also be tax planning, that how to time your gain loss. If you are having short-term losses brought forward, book some profits, and then just as I said, you also, if you want to retain the scrip, then you buy it again, so that to that extent your share, you brought forward losses do not get expired by expiration of time. And just to quote you one query which I got, one unlisted company which got unlisted a few years back. My client was holding huge shares in the sense around 1 lakh shares of the company. When it got unlisted, it was quoting at 150 rupees. So 1 lakh means 1.5 crore rupees he had invested. So at that point of time, he was treating his portfolio as trading, not as investor. So after the company got unlisted, he held it for 5-6 years, and now the occasion arises that what to do with the unlisted company. So my client approached the management of the company, and they are likely to resolve it at the NCLT level. Some bidder is going to buy the company. He expressed some interest. We got the shares valued and we sold it to him. He made an offer letter that the shares were transferred to DMAT, and the consideration was also paid by account by NEFT payment. And that is how this type of tax planning should be done wherever feasible. Now, for SMEs, there are 2-3 things which are very important nowadays. From this financial year, your GST has to be fully reconciled. So you have to make sure that you do not fall in the trap of penalties. And there are so many penalties for compliances. You can't even note it down. So you have to be proactive. Keep your check, reconcile your GST records with your own sales and everything, so that you have a seamless record of the transactions. Whereas in income tax, you could file your returns under 44 AD or ADA, depending on this, if you are in business or profession, and thereby save the headache of maintaining the books. But one thing I would like to tell you, that your profit should be very close to the percentage that you choose to declare, 8%, 10%, 6%. It should not be way apart. Now, you should also see to it whatever can be claimed as deductions. Like, you could have bad debts and all that. Those things also should be taken care at this point of time, so that you are aware up to 31st March you can pay your advance taxes as a 5th installment. So that will save you of the interest, which actually goes out of your capital. So that itself is a very big saving, proper tax plan. Now, other deductions are there, and rest of the things, if anyone wants have any inquiry, particular specific thing that we can discuss. Now, in short term and long term, you have to be very particular. You file your return in time later on, so that your carry forward losses are properly recorded with the department, and you get the benefit at the future time. Manoj, anything in particular we can discuss?
It will be really wonderful. Anybody has any questions can put on the chat box, and also anybody wants can put on your video, share your name, qualification, ask any query, issue. It would be addressed today or in the future sessions. And also, we have quite a few professionals here who have deep knowledge and experience in tax planning. They can also share some insights how tax planning, not avoidance, can be done within the framework of the law and as allowed by the assessing and judicial authorities. It's a welcome open house. All the issues on tax planning, whether for business, profession, presumptive, or related to any transaction, residential house, real estate, commercial, bonds, mutual funds, everything will be covered today and in the future sessions. Sunil, you are there with us?
Yes, very much.
Sunil, you have deep knowledge on tax, part of a big four with decades of experience, now part of the big 10. Your insights on tax planning for the global investor. There is a beeline of investors looking at huge incentives, PLIs. India is becoming earlier a service back office of the world. The top talent of the world now, the top manufacturers are coming here. So much of investments, FDIs and also the huge population here. So many more returns being filed. Your insights on tax planning, not tax avoidance.
Yeah, thanks, Manoj.
Please share a few thoughts about yourself. You have been a part of a think tank for over a decade.
Yeah, definitely. Okay, thanks, Manoj, and good afternoon, everyone. I started my career with Arthur Andersen in late 90s, and then thereafter moved to PwC. I was a partner with PwC for 21 years. And for last 3 years, I'm with Andersen Global, which is a new avatar of what used to be Arthur Andersen. So, of course, Manoj's question is an open-ended, very wide one, but there's some thoughts around something which is in the context of what Mr. Anil Sharma mentioned. I think very, very interesting points he made about how investors in capital markets who deal in cash segment or F&O segment can treat the profits and losses that they make. Incidentally, I come across a few cases where people who trade in F&O treat the profit or loss as business profit. And if it's a loss, because losses were very common 2 or 3 years ago, and they are now claiming losses, those who have incurred losses tend to set it off against their other sources. But what I've seen is a mistake which the department makes is that when they process the returns, they deny the set-off of losses from futures and options against other income in the same year. So I'm talking about in the same year. So this is a mistake which is, I mean, a lot of people have suffered that the department denies the set-off, so that then those investors are suffering because they have to go through the litigation, appeals, etc. This is clearly something that wrong that the department systems are doing it. System meaning that their IT systems are wrongly disallowing losses. But otherwise, in general, my suggestion for those who are investing in stocks either directly or through mutual fund or through PMS or through AIF, recently I did a comparison and I concluded that from a tax compliance point of view, mutual funds are the best. The simple reason, I'm going to give you a couple of reasons. Most of us may be investing, or most of us may be advising investors who are investing in stock markets, is that if you invest through an AIF category 3, then the AIF still pays taxes. The investors don't pay any taxes, but the fund ends up paying taxes at the highest possible rate. So they pay your share of tax, but they apply the highest possible rate of tax, and therefore that is disadvantages. Similarly, there is no clarity about deduction or the management fees. So the management fee which you pay to the fund manager, the AIF manager, is not deductible from the capital gain you make. So therefore, that is a disadvantage. Similarly, in a PMS, suppose you are investing through 2 or 3 different PMS service providers, the PMS fee is not deductible, and that's a big industry issue because from capital gain you can't deduct the PMS fees. But all these issues get sorted out if you invest through a mutual fund. So the mutual fund manager fee automatically gets deducted because your NAV reflects a net of net gains, which is net of all the expenses, including the management fees. And you don't have to do any compliance till you redeem from the mutual fund. Whereas in case of PMS, even if you're not redeeming the funds are lying with the PMS manager, yet you end up getting all the reports at the end of the year, the stocks are held in your name. So you end up reporting this bulky data for your tax return purpose, and sometimes that becomes a very tedious headache. It's a tedious task for anybody to report. So let's assume that you get a PMS report of capital gains from Kotak Securities, HDFC Securities, ILFS, and so on. It is your headache to consolidate all of that and report in the return. You have got no money. You end up paying taxes because the stocks are held in your name. The same thing is what a mutual fund manager does, but you don't have to report anything because you don't have to report anything till you actually get money or redeem the profits. Whereas in case of PMS, even if you're not redeeming, you have to report. And the worst thing about preparing tax return is that all of these have to be reported script-wise, and it becomes a bulky data, especially if these are grandfathered stocks. That means the pre-17 or 18, where you have to report all these script-wise, where you're taking the grandfathering exemption for the capital gains, which have accrued till February or March 18. So I compared all of these factors, and I found that really mutual funds are the best for a person who is interested in the task of fund management to a third-party fund manager. So from a purely from a tax compliance point of view or tax payment point of view, mutual funds really are the best. And which I concluded in one of my recent articles saying that mutual funds sahi hai even from a tax compliance point of view. So with this, I'll conclude.
Wonderful. Now there are a couple of specific questions for you, Sunil.
Yeah, sure.
Two specific companies, listed companies, very well-known companies. One is DHFL, which had huge investors, including well-known investors who call themselves Warren Buffets of India. Maybe they missed out HDFC Group and they said, okay, DHFL also we can get a price book multiple, and a scheme of things, and it can multiply. It went up much faster than HDFC for a few days, for a few months and a few years. Then suddenly there was a shocker. It went into IBC, NCLT, and there was a time it went to 300, 400 also. But even when it was IBC, it was fluctuating from 10 rupees to 30 rupees. It went down, and then just a few days before it got delisted, it went into upper circuit. Now exchanges have the upper circuit, and suddenly they upper circuit, and suddenly without any advance information by any exchange, it will be delisted. It got delisted, and this well-known large investor also, he could not sell the shares. Maybe there is always a greed factor. 13, 14, everybody was huge volumes were being happened, and suddenly 15, 16, 17, 22, one more circuit is always a greed, and nobody knew, and then it got delisted. Specifically, another well-known company, Syntex, there was a demerger into two companies, that plastic tanks, which has a huge market leader, right? Storage tanks. And one was a textile. And people said there is a buyer, Reliance Group is buying textile. And of course, when such companies, sharp companies buy, they buy at the best possible valuation, right? And this was an NCLT case, and it got delisted. Yeah. So two specific issues, how people can handle their investments in these two companies by way of short-term losses, long-term losses, notional losses, and can they make efficient use of the tax planning devices available. Yeah, you are there?
Hello.
Yeah, you are there?
Yeah. Sorry, I got disconnected for some time.
Yeah. So Syntex, it happened as it's a recent case, and there was a pump and dump operation. You know, it comes in various social media group. Buy, Reliance Group is buying, it will go up, and then it get delisted. As per the NCLT scheme, there is nothing left for the equity shareholder, so the value is zero. So can a investor or a trader sell the shares, book a loss, and claim set off against the other gains, whether capital gains, short-term, long-term, or business? This is for Syntex, which is a recent case, and also for DHFL, and also there are so many other companies on NCLT, they get delisted.
Yeah. So I think in such cases, the only legal way would be that you can't simply write off your investment. Obviously, you bought it at a high cost, and now there is no market. The shares are not listed. There are no buyers, and whichever matter goes to IBC, you simply write off the way it happened in Yes Bank's, perpetual bond cases or the other shareholders. The shareholders got nothing. So you can't simply throw away the shares and say that this is my loss and I will claim a set off against other profits. So the only legal way to do is to show that you're selling those shares to somebody. So let's say you bought it for 300 rupees, and now the shares are lying in a physical form or a demat form or whichever. So legally the shares are still existing.
They are in your demat account. They are in your demat account. You can even transfer on Monday. So
Yeah,
what is the solution?
Yeah.
Sir, but who will buy it? That's the question, sir.
No, one second. Let Sunil answer, then you come. Yeah, this is a specific question related to these specific issues.
Yes. So the shareholders should record.
And you can transfer the name, share, possibly demat account in case of a family member or anybody. How do we do it to ensure tax planning? How do we do it the best way and a legitimate way? And why not do it? Because it is allowed. It is actually investor has invested, and why if he has 10 lakhs loss in Syntax and he has 5 lakhs capital gain, he has actually lost. He can't pay. He should not pay tax on 5 lakhs gains, right?
Absolutely. So therefore, one way to record a loss will be that you do an off-market transfer. Obviously, it's an off-market transfer because there's no market, but the shares are lying in the demat account. You record a transfer at 1 rupee to somebody in your family, so anybody, a family or a friend, and then you book a loss, because then you're recording a legal transaction that you sold it. The only thing will be that you are now that shares will be treated as unlisted shares, and therefore all the related rules will apply. Listed shares have a different set of rates or a long-term period of long-term, short-term, whereas for unlisted shares it will be 2 years, and if it's a loss, then you can set it off against any other capital gains.
So this 1 rupee can be the full lot of shares. It could be 100 shares, 1,000 shares, 10,000 shares.
Manoj. Hello.
One second. Yeah, I want Sunil to complete his answer. Then you can supplement.
Sure.
Yeah. So Manoj, you are right. I mean,
Sunil, you got it, no? Whether 100 shares, 1,000 shares, 10,000 shares to 1 rupee, do a transaction and then do a off-market transaction through signing the demat slip, right?
Yeah, that's right. That's
for 31st March.
Yeah, I mean, depending on when you want to book the loss, yes.
And you can, there is no contract note here because the broker can give a contract note only for listed shares.
Correct. So you'll have to do a share purchase agreement the way it is done for any other unlisted company.
So it can be done over an email also, right? I am this following shares at a token amount of so and so, kindly accept. And there's a reply done, right? That becomes a agreement. Agreement is possible and written also. So one can do this by over an email. I am transferring the following shares from demat account so and so to so and so, right? Sunil?
I have a query.
Sunil, your views, then we can have an open house. We'll be having many views. This is a specific question.
So Manoj, I would recommend a proper contract, not just an email exchange. It's good to have a share purchase agreement so that it's not doubted. The genuineness of the transaction should not be doubted. Obviously, if it's a big loss, anybody would want to question or attack that this is not a loss. But then under the law, a capital loss can be booked only when there's a transfer of a share. So therefore, it is important that a proper transfer is done and supported by a contract, by demat transaction and so on.
So section 247 of Income Tax Act clearly shows a transfer, right? One can take the advantage of that.
That's right. That's right.
So a good solution for this. Now, Anil, you are saying something, and then Manish and Krishna also. Let's have one by one. Anil, and then we have Krishna, who said who will buy, and then Manish.
Yes.
Yeah, Anil, you are supplementing what Sunil said. Anil, you are there? Yeah, Krishna, you had some point on who will buy. We'll address that also. Krishna? Krishnan? Krishnan, you are there? Yeah, until then, until Krishnan and Anil comes, yeah, Manish?
I have a question that profit made from sale of shares on listed, like listed on stock exchange, can be set off against sale of shares which are just transferred from one demat account to another demat account. Am I audible?
Yes.
Hello? Yeah.
Yes, Manish. So, so as you know, the capital gain or loss can arise from multiple asset classes, right? You may sell gold, house, shares, unlisted shares, bonds, etc.
Yes.
All the losses from one category can be set off against another. There are certain rules. I mean, and it makes life different if it is listed or unlisted in terms of rates and the period of holding. But otherwise, there are no restrictions in terms of selling a set of loss of one class against another.
Okay, so set off, there is no issue at all.
No.
Then it's a very good, way of set off of the profit and losses both together. Because every family have this kind of shares. I have Syntax, I have Quality, I have another companies which have got delisted or which our shares are not being traded now. So I can transfer those shares to my wife's account and book the losses, and then get it set off against the sale of profit made from the listed shares, right?
Yeah.
Good. Very good.
Manish.
Important thing
and
is
Sunil.
important thing is that the fair market value of the share has to be determined as per Rule 11 UAA and 11 U of the IT Act for transferring unlisted shares.
Okay.
One valuation report will have to be in place.
Anil, just 1 second. We are talking about delisted shares. Unlisted shares is also a separate category. Delisted.
So delisted or unlisted shares तो एक ही हो गए ना?
No. There are unlisted shares also which never got listed. So there are clear RBI rules also and tax rules for unlisted shares. Now these are specific issues on delisted shares. When suddenly they get delisted, there is a purchase contract note, there is a purchase consideration, and there is actual loss, and there are other shares or other income, maybe in other financial instruments, real estate, bonds, and many people were just paying tax on that. So there are clarities there. So whether they can do the transaction before 31st March or they can do in later years. Of course, short term, there is a period. Many people have made huge short-term profits also in the current financial year. Yeah, Sunil and then Anil. Yeah.
See, this Manoj.
Yeah.
See, now they particularly when it gets unlisted, the issue becomes questionable because it is no longer under the SPT regime, correct? So we come out of the SPT regime.
Correct.
Agree? Right? So thereby when the transaction, then it goes to the level of two individuals dealing with each other. So when two individuals are dealing with each other, then it has to be at arm's length. So that arm's length question can be only addressed by a proper valuation report.
Correct.
So now I would go one step further. Instead of transferring the shares to a brother, sister, uncle, auntie, better sell it to the market. Like I did structuring for one of my clients. One listed company got unlisted. So we requested the management to appoint a valuer for valuation of shares. Then proper valuation report was drawn. Then the people who are bidding for the company in NCLT, they only made an offer. So, circumstantially an evidence is created that this is a genuine transaction. May not be cases possible in all cases. But to the extent, because if the losses are huge, then possibly particularly unlisted. So nowadays that Modi has made all the IT department officers free. So they are doing few assessments, not many. So they will be sitting with your papers and you will have to explain and he will simply say, I don't agree with you. That is my belief. So you have to make your transaction so strong that, it will be difficult for him to rebut. So I feel valuation report is very important in such case.
So can I say something with the example?
Yeah, sure. Manish, you and then afterwards Vikram would give some insights on.
So say I have a share of say 1,000 shares of Quality Limited, which got suspended since last 3 years now, almost. Say I bought that shares in 2016. Now suppose that shares, if I transferred to my friend's account at either 1 rupee or 10 rupee, but my cost was 75.
say I transfer it at 10 rupees, which is a, no, rather it's a 2 rupees, which is a face value. So can I book a loss of 75 minus 2 rupees, that is 73 rupees per share. Another point is about valuation report. जिस कंपनी का बैलेंस शीट 4-5 साल से नहीं बना होगा, उसका वैल्यूएशन रिपोर्ट सब कहां से आएगा, और व्हाई कंपनी विल गिव मी? दिस इज माय क्वेरी.
Anil and then Sunil. First, Anil, you'll take it, and then Sunil, you can supplement. Anil, you are there?
उनका आवाज कट रहा है शायद.
Anil, you are there?
Yeah, very much. I can listen to everyone. Can you listen to me? Hello.
थोड़ा loudly बोलिए sir.
We are welcome to have multiple views also, because that is very important. In department also multiple views are taken, but it's better to do it before, look before you leap.
What I mean to say is, जैसे किसी कोई आदमी की बीमारी लग
Can you do little loudly? It's not clear. Voice is not clear.
जैसे कोई घर का आदमी बीमार हो जाता है, so we have to spend on his medication, and he is not earning at that point of time. Same thing is the case with the unlisted company. You will have to do a lot of groundwork and just like in particular case we are discussing some 71,000 shares, 70, 80,000, it may go unnoticed also. If the amount is big, we have to be very careful.
Okay. Yeah. But what is the process? Like I gave you an example of my own.
You can see, I will tell you, it's a matter of chance only. I have a case of reopening in a case where only 2 lakh rupees TDS was not deducted. So,
no, nowadays because income tax people are free, and with the help of system, with the help of artificial intelligence, they can find it anything.
Blackmailing is going on because when one of my assessment 143.3, they did wrong tax calculation. Now he is doing the entire assessment again. He says, I have got 263 my power. I will recommend this to CIT. Wapis bolo.
Same thing is I am facing the same thing.
Yeah. So that is why what I did for my client was I got a valuation report in place. I got the bidding party to buy the share. He made an offer to buy the share and it transferred. But then in your case, 70,000 is not a big amount. You can take a chance.
Correct.
Manoj bhai, yeah. I would like to say that that instance, what we did, it was a transfer of.
Just put your video on. No? Put your video on.
Yeah. So it was more than a lakh share because it was a FPI. So they had certain entered into a genuine transaction when the company was listed, and they had certain shares more than a lakh of rupees shares. Lakh shares, I can say, quantity. Now, what we did, we just suggested after taking, opinion and everything. They said you can take, at least you can transfer at the last the listed price, which was been there, and that that can be taken from the stock exchange.
Yeah, that is possible.
Platform, so that you will not lose any, so that the question will not be made further. Question will not be arising of book value and everything. So we did it like that. Just sharing experience.
Rather, I tell you, Hemant, I have such kind of value of shares of around 5 lakhs, which is zero right now. So
very good, Manish. Many people are having. That is the whole idea of this, having a special conclave.
I have another query about DHFL. Can I say it's related to me?
Specifically, company. As far as the unlisted shares or delisted shares, there are multiple types of delisting. We have a company called Kempla Sanmar, which got voluntarily delisted long ago.
5 rupees. 5 years ago, 5 rupees.
Yes, and then now it came at again IPO. It got listed at around 500 rupees. So there are some people, they say, okay, why should I offer for 5 rupees? Let the stock be there. And okay, 5 rupees, you may get dividend, you may not get dividend. There is an unlisted shares market. But ultimately, it went up by 100 times. So there are many people who just keep the shares. They have got 10 shares. Even if one company comes like that, they have covered the cost of 10 shares.
Yeah,
So
yeah,
this
correct.
is a voluntary delisting. Another point is in NCLT cases, it is a very clear thing on NCLT. When it gets delisted, that means it is not about the cost which investors have bought at various points. It is not about the par value. Intrinsic value is zero. That is why, as per the scheme of resolution plan, it has become zero. That means it has got zero value itself. So there may not be a need of a valuation report because NCLT itself says intrinsic value is zero, Hemant bhai, right? And so it can be done even at 0.001 rupee or 0.01 paisa.
Sir, I will not agree with
even
this.
that
I
is
will
more
not
than the
agree with this.
intrinsic value of the shares.
No. Sometimes the companies are, like Syntax, which is a running company, which has certain assets, including land and building and everything. It has certain value. It is not like that. The value is zero. Basically, it is very lower to the cost of the company also. Whenever you, it is upon the valuation which, as an insolvency profession, we have to carry out, and then only we can sell it to open market. So it's not like that. The value has become zero. There is certain value, and therefore there are certain buyers who are ready to buy at lower price than the company's declaration.
So after delisting, then there is no value, there is no buyer, but it is possible in some cases. In DHFL, controversy was going on even after it got delisted of some rights of the shareholders. So whether there is a hurried delisting, that is also an issue. But here the whole objective is tax planning and seeing before the financial year ends, one gets a full opportunity, possibilities of getting the tax benefits, and one pays a amount of tax which is fair and which is calculated appropriately, right?
Sir, one more query about fixed deposit.
Yeah, any issue? I think we have people. We can cover all issues: real estate, bonds.
Yeah. Sir, 1 minute.
Manish, 1 second.
Okay.
Manish, just on that unlisted only. So I'll just tell you on the execution side, because
Vikram,
we are dealing a lot of these kind of issues where there are two problems. The first one is that there are no buyers. Okay. The second one is that yes, the family office or whether the clients and whoever, they wants to book the losses also. Okay. So what we are doing for our clients is that we are providing them a mechanism where we are executing the transaction through one of our books and providing them all the things like we agree with a contract note, will provide the SPA also will be done, deal sheet will be done, transfers will be done, and then again so taking a third party in between, and then you execute the transaction, and then what you suggested now that I will transfer it to my brother or my wife. So it is better than to do it through a third party. Now, second question here is that whether the SPA is required or not. So for the listed company, see, अभी छोटा मोटा कोई शेयर होल्डर होगा वो कहाँ से SPA वैल्यूएशंस लेके आएगा, कहाँ से वो ये करके आएगा, right? So generally what we suggest to our client is that whatever is the last traded price, and if that company is not even having anything into that, so either last traded price or just a small higher than that last traded price, he or she can basically sell the shares. So that kind of things we are doing. Now, abhi isme delisting mein there is another thing. There are quite a good examples here. So there is a company called LCD Investments. Okay, but last traded price on market is 17 rupees, 717. The company is one of the promoter of Asian Paints. Their intrinsic value is 4,65,000 rupees. Now they have come up with an open offer for delisting for 1,61,000 rupees. So these kind of issues are also going in listed, unlisted kind of a market. So basically, where the information, where the some kind of valuations are available, so we can take those kind of supportings and we can execute this through some third party, like there are many unlisted brokers which are doing this. In fact, we are also doing this. Through that way, they can basically create all the documentations properly, and then they can book their losses, profits, whatever is there. So what I mean to say here is that yes, apart from the taxation, which is anyway has been explained by Anil and Sunil also, the execution and the supporting documents are most needed. So I would not suggest if anyone is doing this through their families or through this, because we are suggesting this to large clients, and we see no assessing officer will basically allow you to transfer shares into one or brother, wife or any relative's account, and then so it clearly shows that means you have done your internal adjustments and all that. So it is always better to take a third party route where and how to do that, that is a separate part. We can discuss that offline, because anyway actually this topic should have been taken 15 days earlier.
I'll come to that very clearly.
Yeah.
If in case a person wants to decide to sell to a family member, brother, let him do it. And if you are doing it through third party, to a third person who is not a family member, and you do it becomes a sham transaction. Actually, ITO has to allow to a brother, if you are doing it to maybe another person and getting the shares back, it is a colorable device, which is proven by courts of law, and it is reversed. It is a sham, you will not get it. So if you transfer the shares to a third person and transfer it back to you, it's a colorable device. Whenever investigated, even after 3 years on reopening, it will be a colorable sham transaction. But if you are doing in a particularly a NCLT issue case to another demat account to whom you know the shares remain there. Ultimately, the intrinsic value is very, very clearly defined in IBC NCLT cases. It is 0. There is a resolution plan. So in that is not a colorable device. One can claim the tax benefit as we have clearly decided. Now the question is of documentation. As Anil Sharma suggested one documentation, and Sunil also suggested a documentation. So there are both options available. Both options are available on documentation because there is no contract note. But both options are available. Now it depends on the materiality of the transaction. The size of the transaction, one can do a agreement, or you can even have a one-page note document which is signed by both of the parties, and possibly, as you may suggest, you said it could be witnessed, or maybe some professional can help in also signing together. So I am aware of this transaction clearly, and so these opportunities must be used, and the transfer can be done today also off market. It can be tomorrow also. The whole idea of that is good, and it is good. We are having multiple views. Concerns are coming, ideas are coming, and solutions are coming. And professionals get opportunity also. But this is a give and give. That is the idea. So people really, when they get benefit, tomorrow they connect with you. Or you suggested one more, this great thing. Tomorrow they may share something else with you on which you can get a professional opportunity. So IPL season is on, starting today, right?
Correct.
Yeah. So which is a match today? Who is playing? Vikram, you track IPL. Who is playing today?
So today, actually, sorry, I
okay, you need to
IPL.
Track. There are lots of teams, and there are lots of teams also now who are raising money from investors, small and large. They are seeking valuation. So we will cover IPL on the go every week, how matches are performing, and also the type of valuations. Very soon we'll be having valuations of IPL teams. And now, Vikram, one particular thing from you and others, the latest developments talks about this week, IIA, Indian Institute of Accounting, benchmark with the best in the world. Your take on it, and I would request everybody else to give a take on it.
Yeah, Manoj, actually, I was going through that. So basically, the governing committee, they wants to do that in the line with the global, which is going on, like CPA, CFA and all that. My take on that is that it's good, we can do that, but the kind of, I think if we can make ICAI only more powerful, and more kind of more powers has been given. I think that would have been more useful thing rather than creating another accounting institute. And yes, competition is always good, but then the recognition, then the monopoly, then the value quality of chartered accountancy profession. So it also creates a question mark also into that. So I think ICAI only has to have been promoted, because we have cost accounting institute, we have ICSI, which is a company secretary institute. So two accounting bodies, and they will also, I was reading a newspaper where they will also be allowed to do the certification work as the chartered accountants are doing. So I'm just wondering, how can we have two regulators for the same profession? So my take was clearly with basically, I think ICAI should only have been given more powers, more kind of a certification, rather than CA course. If you want to do, like we started DISA and all other courses also on insurance and all that. So to do some kind of a extended certification on that, it should have been covered under ICAI only. So this was actually my take. I may be right or wrong, but I think same profession, two accounting bodies. See, like lawyers have their own accounting body, correct? So I think we should have only one accounting body. That is my take on this. Or otherwise, if suppose still they want to do that kind of a institution, those guys should not be allowed to practice as chartered accountants are doing. They can be hired in companies, and they can be used as equivalent as chartered accountant. That is fine. But because profession needs a regulation, and the regulations comes from one single body. That's why we have seen in multiple if you see commodities exchange, so they were having forward commission. They merged into SEBI. Why? Because we need one regulator. There should be only one regulator, one body who can basically regulate, basically understand, basically do all the codes of conducts and everything. So this is my take on that.
Yeah, so open forum, benchmarking with the best in the world, and benchmarking with IITs, IIMs, and solutions are coming. Now, how it is done, let the minds meet, and the people who are influencers and who people feel they can do something, they need to do lots of work on this. Sunil, your take on it? You have been working with global professionals. Sunil?
I have one more text query.
Yeah. Sunil, you are there? Yeah, Manish, your query?
Query is like this, like I had a DHFL fixed deposit of say 1 lakh rupees. Afterwards, वो NCLT में जाने के बाद I got 18,000 rupees back as a full and final money received. How can I claim that 82,000 as a loss in against my interest income from all the fixed deposit?
So this is the case of income from other sources.
Correct.
Under that head.
Yes.
You have been offering interest every year in the past.
Correct.
And you also shown that based on taxability and the limits available, it has been disclosed appropriately.
Yeah, appropriately. Correct.
Right. So would anybody like to answer?
Yeah. So Manoj, capital losses cannot be set off against any other income other than capital gains. So only if you have loss from futures and options, then that can be set off against income from other sources.
Can I carry forward this?
Sunil, here is a FD case of 1 lakh. He got 18,000 back. Interest was offered. So this is the income from other sources. Fixed deposit. It is not a capital gain or a business. It is a FD, fixed deposit.
Yeah, but I think he mentioned of loss from capital source.
No, sir, like this. समझो वापस बोलता हूँ सर कि 1 लाख रुपए का DHFL का fixed deposit था मेरे पास.
Which now, you can mention the company name also.
DHFL, correct.
Okay. FD.
Company FD. Company went to NCLT, and then Piramal Holding bought the Piramal Capital bought the company, and then as per NCLT approval or order, Piramal gave us 18,000 rupees back against the FD value of 1 lakh rupees. Correct?
Yeah.
So,
So Manish, it's a capital loss.
Okay.
Okay. Capital loss cannot be set off against interest.
Okay. So any other way out? Is there any other way out, Sunil bhai?
No, I think you'll have to set off this capital loss with some other capital gain.
Okay.
Or if you can show that you are in the business of lending money regularly.
That is a different thing. Then I can claim a business loss. There is no issue.
Yeah.
That's fine. I think it's difficult to claim this kind of loss in the income of return.
Yeah,
no, what is being said here is a capital loss. It can be claimed against set off against capital gain. So this is a long term, right? It is over the long-term definition. So that means it's a capital loss. You can't set off against the other FD interest in other sources. But if you are booking a long-term capital loss, long-term capital gain, you can set off against it. So tax benefit is certainly available. It has to be done in the financial year. You can't time it out because the date of receipt of money is already decided.
Yeah, it's a financial year 21-22. For that, I have to see that income tax return capital gain schedule where I can fit it basically.
It is a capital asset, right, Sunil? Yeah. That's what you are saying, correct, Sunil?
Yeah.
FD is a capital asset.
Yeah, FD is like any other investment. It's a capital asset, and it will fall under those other assets which are other than the listed shares, and so they fall very should be similar to the way we treat bonds or the debt funds and things like that.
Right. So there is a date of purchase, and that is a date of sale, that is a date on which one got some money from Piramal on the resolution plan. So this is wonderful thing. Manish, you got your answer?
Yeah.
Any other issue? Acha, Sunil, would like to have your view on the latest development on IIA with international outlook, benchmarking with the best in the world globally, and also experience of IIMs and IITs.
No, sorry, I have no views on this. Honestly, I have not been tracking. I don't know globally we know there are CPA institutes. There is nothing similar to IIA, but otherwise I
okay, certainly. Please go through it. I request everybody to go through it. It's a 122-page document which has come, and we'll be covering in detail next week. We have been requested by lots of influencers to see the views come, and before it gets implemented, that's more important. It's a 122-page document. There is a question on the chat box. Can Anil or Sunil take it?
Can a deposit in a company be treated as capital asset? I feel only shares and debentures can be a capital instrument. So my view is that even a deposit is a capital asset. It may not be. So what happens is that suppose
just ensure your video is on, no?
Yeah. So suppose there's a bank, individual who's simply having a saving account. Probably somebody can say that saving account is not a capital asset, but a FD with a company should be treated as a capital asset. When you lose a FD, there is no doubt that it's a capital loss. But whether it's a capital loss from transfer of a capital asset or not, is a question mark. But in my view, FD is something you cannot transfer. So you can't, the way we were talking about earlier, that for shares you book a loss by transferring at 0 or 1 rupee. So you book in case of FD, you can't do that. But I think you should be able to argument that you are relinquishing your right to receive. When you lend money in your balance sheet, you will show it as asset, right? It's an investment, so it's an asset. So capital loss should be available.
Great. All the issues have been discussed, addressed. Anything else we can take it up?
I have one more query, if you permit me. Say like one company, I was working there, they did not deposit the TDS deducted on salary. So in assessment 143.1, income tax is not given me credit of say 70,000, and then they raised a demand of some 85,000 based on that. Now this is one case, but this is the case of say example assessment year 15-16. But I had some refund lying for 13-14 of some 30,000 rupees. So simply the adjusted 30,000, my 30,000 against the demand of 75,000 under section 245, and just they close the matter like this. Now for me, this is a double tax payment. One company is deducted, and second thing, income tax is also collected from me. Now I have been putting grievances in income tax. I put it grievances in Bangalore. Some Twitter account has been put the grievances. I put the grievances to the ITO, but ITO every time says nothing doing. We cannot give you credit. Now, what is the solution? Where can I go?
Have you filed an appeal against the first year for which demand has been raised?
No, sir, no.
That you should do, because there are court rulings which say that you, once somebody has deducted tax, then you go and recover tax from that person, and it applies to not only salary.
Yeah, but section 205 says clear cut. Ek baar tax cut gaya, so ITO cannot demand, right?
So there are many you'll find many favorable court rulings which says that you can't be recovered from a person who has suffered TDS.
वो ITO को बोला भी मैंने actually personally 2 बार. But every time
I suggest you file appeal for the first year. Now in their system, that tax has already been recovered because of the refund.
Okay.
So now you have to get refund for that year itself, the first year itself.
Okay. So now why I should file appeal?
Yeah, you should file.
Can I file appeal now?
When did you get the demand?
Sir, काफी time हो गया, 3-4 साल हो गए चीज को.
So now you file a rectification, you will get rejection order under 154. Against that, you file appeal.
Okay. Okay. So I should file rectification.
Yeah.
Okay.
So online, then you will get an online order, which will again be the rejection order. Then that you can go for appeal against that.
Okay.
Good. Sunil, Vikram has a question for you. I think he has posted in the chat box on SR Steel.
Sunil, basically SR Steel, it was there in the demat, and then the company got into NCLT. Then ArcelorMittal has also was also interested in that company, and then they decided to do the reduction of capital. And during that period, all the demat shares are basically extinguished by the company. Now this is more than 2 years now. So when should basically investor should book a loss, or how we can deal with that?
Yeah. So see, this is in a way connected to the issue where we were talking about earlier, that should we have, what kind of documentation we should have, because you have to record a transaction. But first thing I think we should all appreciate is that nobody can deny that the shareholder has lost money, right? There is a commercial loss. We are debating about giving it a legal form. So therefore, we have to go by the tax laws, and tax laws, unfortunately, either don't keep pace with the reality or are unnecessarily burdensome. They have those typical technical definitions and so on, which is why we were earlier talking about the fact that capital loss are recorded or regarded as capital loss when there's a transfer of a capital asset. In this case, there is an extinguishment of shares, and this is not the only case. There have been other cases also where either the shareholders or bondholders, like Yes Bank, bondholders simply got nothing. They were simply cancelled. So therefore, the security even ceases to exist. The shares don't even exist. So you can't do anything, or you can't even transfer. But the definition of transfer in the income tax law says that transfer, the way it is defined under the Transfer of Property Act, or extinguishment of a right or relinquishment of a right. This is a clear case of extinguishment of a right, that by force, by action of the court in CLT, their shares got extinguished. So it's covered within the definition of transfer. So in my view, this should be allowed as a loss in the year in which the cancellation happened. That means whenever the restructuring scheme was passed by the court, or the court passed an order that from this date onwards shares don't exist, or the date on which the shares get debited from the demat account. That's the date in which your shares got transferred effectively. In that year, you should claim a loss.
Okay, understood. Thank you, Sunil.
Any other issues? Any other questions? Krishnan, your questions have been addressed fully. Any other issue? Very exhaustive, detailed session on tax planning. Much more queries came than expected. There are people who have huge opportunities they often don't claim, and can able to pay taxes on their real income after appropriate set-offs, benefits under whichever head. So it's a great opportunity. Still a week to go. Further planning can be done further. Also documentation could be done even later. Always better to have on time and real time. But there are many things where add value, it can be done better. Any other issue we can take? Otherwise we close the session. Wonderful interactive sessions on so many topics. Krishnan?
Superb insight. Sunil Kidwani sir's insight, Vikram Thanvi sir, Manish sir's questions was superb, very practical. Even Anil Sharma sir's logic was superb. Superb session today. Very
wonderful.
insightful.
Krishnan has a rich experience with Aditya Birla Group. And excellent session. And Manish, very interesting cases done. Fixed deposit, equity shares, and all demystified. And one can go ahead and claim with appropriate documentation as suggested by the after a deep dive interaction, multiple options. So if everything is addressed, we close the session here.
Yeah, definitely. Yeah, I think we can close that. It was a really very interactive session.
Superb, superb session.
Superb session. Sunil
Enjoy the IPL matches.
Yeah, we will be covering that next week.
Who is winning? Who are the winners? Who are reaching the semi-final and final? And what if they those shares are available? If those are winning the cup, valuation will certainly improve, hopefully. But the most important is how many people participated in IPL. Book My Show has got the rights, right? Ticketing rights. And many will be watching on the OTT platforms also. So big money coming in sponsorship. Lots of things happening in media also. Mergers, acquisitions happening. And lots of people had tension for last 2 years, right? So there is a pent-up demand. Let's wish all the cricketers great success. Practice was going on at MCA, BKC yesterday also. So wonderful insights.
Yeah, super.
Thank you, everybody.
Happy new financial year. Before I have 2 live events on being from the insurance industry for a long time. I have 2 events on 31st March. I got engaged on 31st March. So that's a fabulous day for me. My son was born on 31st March. So it was a dhamaka day for me at Birla Sun Life Insurance. The entire CEO's office, everybody, my phone was continuously ringing. So
wonderful. So before 31st March, 12 o'clock end, do your transactions. See that your demat account and the transactions, bank transactions are done and accounts are closed.
In demat, sir. It's simple. SIP can
wonderful.
compound
Okay.
money.
Thank you very much. We close the session here.
Sure.
Yeah. We close the session.
Happy
Keep shipping to
weekend.
IPL. Happy
Yeah.
weekend, happy new
Thank you.
financial year, sir, to all.
Thank
in
you.
advance.
Okay.